Are we Gucci or not? We're not. We're not. We should be, y'all. Are we Gucci or not? We're not. You know, is it just me or does this microphone sound worse than the headset one? Is it just fucking me? Is it just me? Because I think it sounds worse, to be honest. I was watching an old video today and I'm like, damn, that sounds way better before. Way fucking better. Maybe we have time to return this thing still. Or maybe it's like the settings or something. I don't know. It's just, it sounds fucking weird. I can't describe it. Don't make a note actually about that. What's that? What that? Have a pretty chill day, right? Actually, let's get the Discord first. More easy shorts. The new question. Live stream now. Live stream now. Two of the biggest market following channels are down. If you live stream and follow the market now, you'll pick up a lot of followers. I'm a little late for that. That was at 9:47 a.m. 7:21 p.m. You know, I wouldn't have done it. I then went to the doctor today because of my ear. It was bothering me even more today. Bothering me even more. They gave me like prescription eardrops, some kind of steroid apparently. My ear's about to be fucking yoked. But yeah, in terms of the juice box, pretty straightforward, right? We kind of talked about shorting at the zone. And there you fucking have it, right? Ding, 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 ding. Pretty easy setup, literally right at the fucking value area high. Also could have got filled with the fib, right? Just ignoring that. We would have had a perfect fill as well. Yeah, pretty easy day, right? So this last couple of days, the market's giving you layups right now, guys. These are freebie fucking trades you should be taking. Literally just layups. Update the levels though. We got a video to watch. We got two videos to watch actually. Never quite made it to a level though. Never quite made it down to this bitch. At least not yet. Not looking too hot though, right? Not looking too hot. Boom. Just put this over here, yeah, make it easier. Want to memorize the numbers. It's just lost some pretty major levels, right? Lost some major levels along the way in terms of like previous month value area and whatnot. I don't think we need to delete anything, right? A mark of that thing out. But how'd everything else end up doing? This alarm was for this, yeah. Been watching Netflix. Been watching Netflix quite intently today. It'll be time to buy some Netflix and chill, right? Boom. Hmm. Dev, hello, hello, Dev. Hello, hello. I think you guys might have swindled me, right? I think you guys may have swindled me with this microphone. Hmm. I mean, it's just me or does the old one sound better? Like I was listening to an old video today before I got this microphone, and I swear it sounds better. Or like maybe something with the settings. I can't describe it. Like I was listening to it in my car today, and something about this sounds like I'm not sure. I don't know enough about audio to describe the sound. That's the problem. But there's like something about it, like a. This level seems so much juicier, so much juicier. Do we get down there though? Another 20% from here. Hey, you're welcome to put it back. You'll have to suck up and deal with it. Barely hear you the old way. If I can hear you. It's definitely much louder. That much just cannot be disputed. I think I just need to play with the settings a little bit, change the sound perhaps. Yeah, like I lowered it a little today. It shouldn't be as loud as it has been the past few days. Oh yeah, whoops. We'll give this some more thought. Was this on gold? I think some of those things the audio engineer was talking about was more tuning than we needed. I just want to be able to hear you. Don't care about amplifying and deafening certain frequencies. Yeah, like I can't say I do either, but if someone knows better, might as well go with us what they're going with. But no, that is what I was gonna test. Like I was gonna screenshot it and change some of that stuff back and see how it sounds. Because I never really got like once we increased. Like, what was the issue at first? So when we got the new microphone, it wasn't loud still, right? And then after going through all those settings, then it was like much louder, and then we changed the frequency stuff, if I recall. So I wanted to see the test it now that it's much louder without some of that stuff, or like changing it to other things. Just out of curiosity more than anything, because I can't tell like if it's just the way the microphone is and it's gonna sound like that regardless of any settings, or if it's because certain settings made it sound this way. There's a microphone me adjusted to fix the issue. Yeah, so I'm curious. I'm curious. The only problem is I'm not gonna be here too long. I'm not gonna be having this PC where I'm at. That's the main problem. You can change back to your old microphone and keep the same settings. I don't know about that. I don't know about that. Because all the settings that we changed were in the software for this new one. Like, we didn't change anything on like Windows, for example. What other alarm? Something else went off today. Oh yeah. Also, all the wheat stocks had a huge sell-off today after they announced the news. A pretty big sell the news event, essentially. We might have a chance to get in on some of this stuff on these like gap fills if they even do them. I was watching a video, and apparently some of the way that these companies are structured, or like the ETFs for them, are structured a little oddly. Which means that they don't trade the way you expect them to trade. They're like a lot of like over-the-counter transactions going in and out of the ETF. Executive orders mean shit. You even said that. You said that. Well, I think like that's their plan long term, regardless. It's just kind of like a step in that direction. It's expected though, right? Like look how much because these rumors have been spreading for a while, right? Like I was hearing people talk about this stuff. Like we were looking at these stocks back in the summer at some point. I think it was already up here when we first looked at it, so I was like, "Fuck, we already missed it." The people that like got in early, like they just made hella profit, right? And then just dump on this news. Kind of the same thing happened with the Bitcoin ETF. We're just loading up before the announcement. Then as soon as they announce it, just dump all their bags. No federal legalization. Marijuana remains illegal. Possessed under the Federal Controlled Substance Acts. Changing it would require an active RS. I'm sure they'll move towards it, right? I don't know. That could, US is just lagging a little bit in that regard. Because well, most other countries have already done that. In Canada, you can like literally stand in front of a police officer and smoke a blunt in their face. They'll probably ask you to fucking hit it. I don't know though. I don't know, like, because obviously there's a lot of implications with like the jail system there, right? If they were to do that. This thing gonna come down here or not? Let's look at some of this data actually. Before we get too distracted. We'll put this here. They're saying they're going to legalize weed for decades. But like it is legal there in some capacities, isn't it? Like medical purposes. But from my understanding, like literally anybody basically anybody can qualify for that. Maybe not, I don't know. Why not open a states may legalize it, but federally it's illegal. Anyone possessing in front of a federal agent gets arrested, jailed, prosecuted. That's odd. That is strange indeed. I don't know. I don't know about that. I like that they did that in Canada necessarily. Like, not that I have anything against weed per se, but like, I think a lot of people like to downplay the negatives of weed, especially in younger people. Like, it's one thing to start smoking weed when you're like 25, in your 30s, etc. Both fully developed brain. Another thing to be like 18 or 16 smoking. And people can sit here and say like, "Oh yeah, I'm productive when I'm high," blah blah blah. I've rarely seen it, rarely. Yeah, like everyone says that they are, but when it comes to actually seeing it, I've rarely, a handful of people I know are like that. Republicans are all about removing government regulations / control, but they're stuck on this issue. Well, it's a pretty big deal, right? I mean, I don't know the data. Like, I could be like completely off with this. From my understanding, there's like a lot of people in jail in US for like marijuana possession and whatnot. So it would be like quite a big deal to like the whole jailing complex. Goal of the government is to maximize the economy, therefore maximize the workforce. If they could have their way, they would have everyone working for some dirt cheap. I don't know about that. I don't think it goes that far. There's lots of studies on this, right? If you have like happier employees are better employees, more productive and whatnot. If everyone is just miserable working nonstop, it's gonna be like less efficient. Is there more? Interesting. Weed reduces production output of population. That's why it will only always be illegal. The only time it will be legalized is when it improves production value, i.e. medical treatments, pulls civil citizen out of disability and back to the workforce. I don't know about that. I think once like once all the boomers die and it's our people that are in government and whatnot, I suspect it's going to be legal there as well. If not sooner. If the population is anything like it is in Canada, which I suspect is probably pretty similar. No one really cares, right? No one really cares here. Like, if you want to smoke, smoke. If you don't, don't. So like once the people of that mindset become like policymakers, unless there's like some like crazy lobbying efforts to prevent it, I don't see why they'd keep it that way. All at you thinking it's a boomers keeping it illegalized. Well, I'm sure it's partly because of it. Like a lot of laws are like that. But yeah, obviously there's like huge lobbying behind that stuff. Crash on Japan, hike, or pump, or flat. Who knows? Who knows? Probably not. Probably nothing really. I mean, it's already like priced in. Everyone already knows they're raising it. I don't think it's gonna be that big of a deal, but we'll see. I'd imagine the options expiry is going to be more impactful than that news, to be honest. And we have like the Michigan sentiment data tomorrow and whatnot. Also, I wouldn't be like taking anything in the market particularly seriously right now. Like until the new year rolls around, then everyone's back at work. I'm not really putting much meaning into any move in either direction until then. Part of the reason why I left these trades the way I did, just like hedge however they are until we break these like higher time frame levels. I don't really care. I could have been in a coma for the past like 3 weeks and not missed anything. And we got in here and we TP'd like what here? Then we like added back, TP'd again. And then we hedged it, closed out the shorts down here, like 75% of them. And then here, I think we TP'd it again, right, on the long. It was either this one or this one, I don't recall which. This one we might just left it hedged. And then we left it like that ever since. So ever since here, could have done literally nothing, just passed out. 15 days, there's nothing. Killing us with boredom. Unless you're scalping, there's a lot of little fun trades going on. I wouldn't be expecting any crazy directional moves. Or like be trusting of the current ones. I think pump just because all the shorts closing their positions. I mean, we have to pump first for that to happen, right? Like, if no one's underwater, there's nobody to squeeze. Like, literally anyone that's shorted this entire sequence of price action, like 99% of them are in profit. So there's no one to squeeze right now, right? It'd be another thing if we gap up like up to here tomorrow, then all of a sudden this whole cluster of price action is fucked. Then you'd probably see like a squeeze, but given how most of these charts are looking, there's nothing to really force as of now. Japanese investors getting better returns in Japanese stock market for the first time, so they put money from the US, SPX, put it back in Japanese stocks. Less demand for US stocks means lower prices. Right now, US billionaires are rotating out of market weighted SPY into equal weighting SPY. Not the Japanese stockholders that matter though. It's people short the yen or buying US assets with it. Well, it's just that the interest rate was so low there. Like even just for bonds, like it used to have like a 0% interest rate. So you could have literally borrowed money there at no additional cost, and then just put it into like UST bills for like whatever the rate is. Even if it's like any percent above zero, you're making gains, right? Especially when you consider the currency exchange. But yeah, a lot of people were just borrowing at super low rates and just buying a bunch of US assets. So now they have to like start paying interest on it more. Like they're gonna sell some off and start paying it back. Yeah, in terms of like betting against the US market, I don't know. I don't follow. That's kind of like part of my too. I actually need to write that down now that you do mention that. Good thing you said that. Because I don't really dabble in like foreign markets too much. Like obviously we kind of keep track of some of these like RAM and memory manufacturers and whatnot. But it is important to be like, mindful of emerging markets like the Nifty. Probably a lot of pretty good quality trades out there. And also I'd imagine the typical trader in those regions is probably not as sophisticated as they are here. I suspect. Maybe I'm wrong. I'm just using Japanese investors as placeholder for Japanese currency. Currency exchange is flipping those. You aren't able to make money doing that anymore. Spread's getting smaller at least. Yeah, but like like it seems like the real shock of this whole Japan thing was a while ago, right? Like this was the real shock when that happened. Because that was the first time the whole pivot started. I think now like people have been slowly starting to unwind that trade for like a long time now, right? It's been over a year. I don't think it's nearly as impactful as people are thinking about. HSI doesn't even come close to QQQ in returns. What is that? The Hang Shang Index. I mean, I don't know about the indexes necessarily, but I'd imagine there's because like these charts are pretty crazy, right? So I suspect there's a lot of things in like not just like China, like Asia, Europe as well. Maybe there isn't, but it's worth exploring, right? Maybe there's some stuff we can kind of find in there that's like of interest. Also a way to diversify, like lower your risk of your portfolio and not being solely centered around the US market. Although I mean, I haven't done any correlation testing on this, but I'd imagine if the US market is going up or down, most of the markets kind of follow along with it. But for instance, when there was a tariff dump this year, like in April or whatever it was, there was a lot of like companies in the European stock market that were like seeing some pretty crazy gains. So like right now, I don't have the knowledge of these things, but that's what I put on my to-do list. So the next time something like that happens, we're a bit more prepared. Prepared to seize the opportunity, right? As of late 2024, Japanese investors held approximately 16 trillion US equities. Yeah, they hold a ton. They hold a ton. And I think they're like one of the biggest holders of treasury bills as well, if not the biggest. So let's mark some of this stuff out. We are prepared for later. Check my calculations. Calculations for what? I didn't calculate shit. Can barely do math. Apparently the new ChatGPT model is pretty good at like mathematics. I was reading some like long ass thread on X today with a bunch of like mathematicians talking about it. Bunch of nerds. Oh, you were talking to him? That makes sense. Red boxes, it's liquidations from Coin Inc. or something similar. It's like a high block. You can use Coin Glass as well. Just depends. Like if you want these for like alts, like you like usually the free ones don't have it. So you can kind of use high block for that, but you do have to pay for it. But you know, I would suggest if you're everyone that's going to be trading, you might as well. Okay, well, we'll put a little asterisk on this statement that it probably depends on where you live. But at least where I live, and I think the US as well, like you can expense all these costs, like all trading view, like exo charts, whatever service you're using, bookmap, so on and so forth. You can like expense them if you're trading through like an LLC or anything of that nature. Oh, whoops. Also keep in mind that the red boxes like aren't like perfect, right? They are like estimations. Like they're usually quite accurate. But they are like if you read through how they're like constructed, like they are somewhat estimated. So like yeah, it's good to have like a visual reference, like which is I like to have when I'm trading in the moment. So I don't have to like sit here looking at everything at the same time. But you usually want to be watching the open interest when you get through these zones as well, just to like verify that like people are actually closing out. They're pretty accurate though. They are pretty damn accurate. We'll say that. The amount of times that these things get like wicked through like down to the pixel or like pretty damn close, pretty high. Pretty high. Is Proto Olympic? Of course they do, because the Asian markets absolutely blow goats. I'm having to raise interest rates because their balls even that isn't going to change Japanese investors. How's the Nikkei doing? Why not? Pretty good. It's not bad, right? 25% this year. Once S&P. Doing better than the S&P by 10%, no less. Greg Biffle and his family died in a plane crash this morning. It's just sad. Oh, yeah, I don't know who that is. Who is that? Like, I saw the news story, but I have no clue who that is. Greg Biffle. Oh, he's like a NASCAR driver? Damn. That must feel extra bad for you. Oh, the whole family died. Wow, that is sad. That's really sad. Wow. Right before Christmas too. That's what feels bad right there. Do they know what happened? I don't know, man. These like small planes, I don't know if I'm trusting of them, man. See these things strung up on the news with crashes a little too often for my liking. Departing here today. It's about 2%. UK up 25. Hmm. I'm not sure. Sounds like the plane was turning back, head to the airport. Scary, right? They have to like talk about one of the worst ways to die. Well, I'm talking about one of the worst, but like not one of the better ones. We'll say that. It's like you the whole time you're just watching it, right? You're just watching yourself plummet towards the earth. Boom. Like I remember reading a lot about the Kobe Bryant one. A lot of it was like user error from the pilot. And it seems like that's usually the case for a lot of these, actually. Small airplanes are statistically riskier than large commercial airliners, with significantly higher accident rates per flight hour, primarily due to more frequent pilot error. Yeah, exactly. Environmental factors. Yeah, the Kobe Bryant one was like related to fog. I remember reading it, like there was like a fog issue with that one. A large planes are more complex. Blah 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 blah. I think that's Kevin learned to fly one. Yeah, that's how I saw, because that Me Kevin guy made a video, and I think he's like, I'm not super familiar, but I've seen him mention planes a few times, so he's obviously like into that to some extent. Like I think he even owned a plane, right? Something along those lines. Those airline pilots can be super dumb. It's like the trucking industry. The drivers are imported from foreign countries and can't speak English. I've never seen that. I never had a pilot like that, but well, it's possible. Yeah, I suspect the pilots are vetted a bit more than the truck drivers. But yeah, like there's a lot of like autopilot involved with that stuff. We still have to like land it, right? Like takeoff and landing is I think mostly done manually. But yeah, the trucking industry is, I don't know, like maybe you guys can tell me because you guys in the US, but from what I read online, it seems like California is fucking, I don't know what they're on. Like they're definitely smoking weed out there for sure. So I've seen so many stories of like truck drivers that got like licensed in that like state. Don't know what's going on. There's a video, what was it? It was just some Asian guy, and he got pulled over, and he was like driving in his boxers. He was basically naked driving. And he stopped his truck to sleep like right on the side of the highway, which isn't allowed apparently in whatever state he got pulled over in for doing this. And then like when the state officer had the body cam, because it's like a body cam footage, the video, and they started asking the guy questions, he couldn't speak any English, like literally any English. And then the guy had him do like a basic road sign test where he would like show him like just some randomized sign that like you should know as like someone's driving a car, and he didn't know like a single fucking one. And I've seen like multiple stories like that. And then there was a whole story with the guy that U-turned the truck in the middle of the highway, right? And people kind of drove into it, like decapitated themselves essentially. That sparked a lot of outrage. Most of the small plane crashes are because of pilot error. It's probably a good idea to know how to pilot plane yourself rather than let a dumb guy fly. I mean, like, why are you assuming the people know how to fly are dumb? They're probably as equally as intelligent as you. Well, the thing is that a lot of those people don't fly planes for a living. It's like they got their like licensing to fly the plane, and then they met like the minimum threshold for hours to be able to do it. And then they fly planes once in a while, but that's not like a lifetime of experience flying planes. So if you have some like an obscure niche thing happen while flying, most people aren't gonna be prepared for that, like yourself included. Or like you're flying through like thick fog, right? Maybe that happens like once a year. Meet Kevin bought a plane that he knew he could land. Even if the engines failed in mid-flight. His parachutes and everything. That's why he sprung for the more expensive jet. John Denver died. Who's that? John Denver. Some kind of music artist. JFK Jr. died flying his plane. Greg Biffle was inspired to learn how to fly from his team owner, Jack Roush, who himself almost died in a plane crash. Yeah, just sketchy, right? Just sketchy. Yeah, that Kobe one was sad. I remember that like that's one of those days like I just remember like vividly. I was chilling like at my ex-girlfriend's house, like, on her bed, and I remember I got the like my phone had a notification. I looked at it, and it was like and I never get like news notifications, so it was like odd. I'm like, what the hell? And the story was about Kobe dying. I was like, damn, damn, damn. Same with like when Michael Jackson died. You know, I'm not even like a huge fan of basketball per se, but like the mindset, right? The Kobe mindset, I was always a huge fan of. Why I grind the way I do, right? I could be chilling on the beach doing nothing. Job's not finished though. Chilling in a beach. Yeah, flying small planes though. I don't know. I don't know. Same with parachuting. I don't know about that either. A little too sketchy. Same with bungee jumping. The problem is that like we grew up in an era where like these kind of videos were circulating online for people to see easily, right? Someone dying right in front of your eyes on fucking YouTube. I've seen it one too many deaths around like in doing those kind of things. It makes me want to pass up on it. Farrah Fawcett died right around the time of Michael Jackson. Who the hell's that? Keep in mind that I don't really watch movies or TV, and I never really have. So if you start mentioning a bunch of people, like I'm not gonna know who the hell they are. Another actress. Hmm. Did we ever finish this? We did not, right? And I remember looking this up too. Like having a like just because you have the parachute on you, it does not mean like first of all, if you're in a helicopter, you can't really parachute because it's not like high enough. Also, depending on the height of the plane, you might not be able to parachute either because you have to have like a minimum height to be able to like effectively parachute from the ground. If you're like too close to it, like the parachute's like not an option. Should be good enough, right? Some low time frame ones for later. The juice box later. The Charlie's Angels girl. Like the movie? Or is that like something else? Oh yeah, apparently it was a movie. Interesting. What happened to that series? Oh, probably they're making a new one. With Scarlett Johansson. Interesting. And Angelina Jolie. Interesting. Greg Biffle received national media exposure after Hurricane Helene, making several rescues in his helicopter and transporting medical needs. Yeah, definitely helpful. Like, I know in Spain, the what's the company? Like Zara or Zara. You guys probably call it Zara. Like the CEO of that company is like a private jet in Spain, and whenever he's not using it, he kind of like not donates it, but if there's ever a need to transport any kind of organ in the country on some kind of emergency basis, like they use his jet, assuming he's like not using it. Free of cost. Might as well, right? Okay, I think we're done nerding over here for now. Yeah, we got the nerd out finished for now. Okay. Our reserve parachute might fully open in as little as 400 feet, with leaves no room for air, delay, or navigation. The lowest recorded survival jump with a military style parachute is around 100 feet. It's pretty low. Also seems like it was done by a professional. Boom. In an absolute emergency, you might deploy parachute as low as 1,000 to 1,500 feet. This is extremely risky, requires specialized gear. Yeah, that's what I mean. Like, you have to be pretty high for this stuff. Because I remember, like, when Kobe died, like that day when I was sitting on her bed, I was like looking up this shit on my phone out of curiosity. Because like my first instinct was that the reason you can't parachute out of a helicopter, I figured, is because like, you have to pull the chute immediately, and you have a risk of getting it caught in like the rotor. Then I was like, okay, they can like wait a bit and then pull it. And that's when I came across the whole motion that you have to be like a certain height. Either way, not an ideal scenario, right? Ideally, we're not ever having to parachute out of a crashing plane. In the ideal world. Okay. I don't know if this video is helicopter wings are blowing air down though. Yeah, I'm not sure. I'm not sure how the mechanics of it would work. I've never parachuted out of a helicopter. I don't know if this is like, is this like a re-upload of the other video we saw, or is this new?
This guy just made.
Okay, it's definitely different in terms of the trading. But this is not an interview video. Maybe we'll watch one of these first. We'll put an alarm. Go here. We'll cancel some of these. If this is gonna be like the last video, I don't really want to watch it, to be honest.
This guy just made $10,000 in 10 minutes.
What they are doing is that these buyers are trying to protect it. Done. We took another 2,000 out of the market. We took another 3,600. Bam. 24,300 for the session. We are done in 20 minutes. I trade million accounts. It's my personal account. You cannot do $25,000 session getting a small risk on a 100,000 account. It's impossible. What you see here is not only because of the volume and the platform, because we need to be honest in this. It's
the world's best scalper, one and only Fabio Valentini.
If the market today wants to give me 30,000, I take 30,000. If the market is continuing to action, I can continue to trade and build. But holding one trade for all the movement is something that I was doing before, and I was less consistent.
For the first time in the industry, I sit down and do a live podcast whilst the trader trades live the New York session.
On Monday, we did $10,000. Yesterday, we closed New York at 28,000. And today, we are sitting at 11,000. So we will try to close a 6 figures week.
I ask key questions about his process, how he handles drawdown, key trading decisions in real time.
You cannot have 1 to 20 risk to reward with 75%. If you have, call me because you are some billionaire.
In this 2-hour session, you will see a deep dive into an elite trading mind. The #1 podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Welcome everyone back to the Words of Wisdom podcast, the #1 trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. Talking which today, we're in Dubai and we're doing something a bit different today. Today we're going to have live trading, which you know already who that must be. This trader was on Chart Fanatics and had an episode that did over 1 million views in just 3 weeks because he traded live the New York session. Not only that, he has another video that's already done 1.7 million, doing the exact same thing, trading live in front of you. And right now, before coming to today's episode and recording, he's already traded London session, where he's made over $10,000 just in London session alone. New York session has just begun. It's the one and only Fabio Valentini.
Thank you, Aris, for hosting and this lovely presentation. Today we are going to do a breakdown of the New York session. Now, considering all the love that the community of Chart Fanatics showed to me, I'm going to share the London session that I did yesterday and today. It was an amazing session, really high win rate, amazing setup. And now we are ready to start. Today it's the 15th of October. I traded the London also today. We are sitting at 10,000 and almost $11,000 profit. I have to share with you my rules to trade the session. The drawdown, the maximum drawdown that I accept for the day is 10,000. So considering we are already in profit, the maximum that we can do is lose this 10,000, go back to break even and lose another 10,000. because I'm not willing to go above this. The previous week, let me clarify for you, the previous days of the week. So Monday we did $10,000. Yesterday we closed New York at 28,000. And today we are sitting at 11,000. So we will try to close a 6 figures week.
Incredible.
And the New York session is getting ready. I can see already a little bit of absorption on the bottom. We are recording the screen so you don't have a shaky camera like I did with Andrea in the first video, but they loved it. They loved it.
Yeah.
So I'm going to give a breakdown and I will get closer to it so we can also see how the session is unfolding. So usually I wait for European time, the first 30 minutes of New York opening to have a little bit of stability in the session. But I can already see that the sellers are getting absorbed brutally. So I can expect this high to be taken and then to have a good session going up. I will scale in with small contracts, and that as we build profit, even if we are already 11,000 in profit, we are going to, so the first high is purged for the day. What I expect is to have a long session, and I will explain you why. We are using the profile distribution of the first hours of the session. As you can see, we did an amazing reaction on the value area low. We were doing an introduction, otherwise this would have been a long.
Yeah.
And it's an amazing long. Now we expect a little bit of retracement and we can trigger our first long position here.
Incredible.
What you are seeing here, I change a little bit the template and I will explain you why. People that see me are used to see big trades, okay? It's the same template, just I make it hollow, so it's empty inside, so they can see better the candles. This is the only change that...
Which time frame are we on? Because these candles are closing rapidly.
I made the 40 range now, so it's a range chart, because when you are in New York opening, if you do 1 minute candle, you can have huge candle and all the data inside gets aggregated. So I will show you how much is different 1 minute or 5 minutes. Let's do 5 minutes. I show you the one that we were using the other time. You see how much it's difficult to read. It's all clutter. But if you use either 1 minute or I like to use range during opening, you can see really clearly what's happening.
I'm thinking you can use this on TradingView, right? Well, on Excel charts, they have all this stuff. But yeah, like when it comes to these kind of chart, oh, they do have something similar. I don't know if it's the same though, right? What are the settings for this? Interesting. I'd have to play with this to see if it's like as customizable, but it's interesting that they have something like that. Just fucked up my whole chart.
With Trump again, because Friday was pretty difficult, and so we have an intra gap. It's really rare to see something like this, and we are trying to build our first position of the day. The first position that I'm considering, as I was saying to you, is going long from the bottom of the range, from here, going to target the value area high, so we have a lot of room of movement. Now, this gap is not really convenient for us to trade because we are trading against this huge pressure. I want to see some absorption here. How can we see absorption? As I explained to you, big trades, it means they are hitting a wall, that is this area that I created, and then going to capitalize with an asymmetrical risk to reward to go long. This is the setup that I explained in Chart Fanatic, that is going from the value area low in a momentum day to the value area high. And the setup is trying to unfold. They are trying to push down. As of now, they are having result. So I don't want to go against the flow. If they are managing to breach this level, I don't want to be inside. But I can already start to build.
There was quite a huge controversy with this thing, because like this software, like him and some other guy released it, partnering with some like third-party company. I don't know who. But apparently, they literally just like fully used some like old software's like existing code base and just like kind of reskinned it, like the UI, and added like colors to the candles and whatnot. Which is a little sketchy, a little odd.
position hub, what you see, it's interactive broker because it's directly connected, I can start to build buy stop. What does it mean? That if the market gets heavily absorbed here, I want to be covered below this low. Okay, so I'm going to build my position here. We are not going super aggressive on the size, and we check if these sellers are having a follow through. As of now, the sellers are really strong. They breach the level. Okay, so what I'm doing now is canceling the buy stop and going to consider another area. So this one is not valid. We took a stop loss? No. Why? Because we analyze exactly the interaction between the market participants. Now, this is the distribution. Let's make it including more data. As you can see here, there is a red level, okay? This one is the POC, so where the most volume got exchanged in the value area low. So basically, it's giving me the point of maximum interest for the accumulation that created this up movement. So this is the second area that I can consider. If this area gets broken, I don't want to be long for the day. So it will be really, with a big probability, a consolidation day. Let's check what they are doing. We can check also with the delta, what they can expect, and we can start to build our long position. 1, 2, 3 contract, going for 4. We are going to cover ourselves below here. It's only $2,000 risk. We can take other position here, and we are going to try all the recovery of this movement for a profit of $7,000. Now, I didn't load at full size because I want to scale as we go up. I want to be right with the market, so I'm not to load everything while the market is collapsing. But what I can see clearly here is that they are starting to get heavily absorbed. So I have an area, and if we want to be more conservative, we can already cover our stop losses here. We have half the risk on the position, and going to load also position on the way high. So this one is too high. We can load other 2, 1 and 2, and try to capitalize on the long. Sellers super aggressive, but fortunately for us, they are being absorbed. We are risking 2,000. Okay, we are risking 2,000 to make a potential $10,000. Okay, so soon, guys, we will go risk free on this position. This is the AAA setup. Why AAA setup? Value area low, so we are really low on the curve. The market participants are setting up because it's 30 minutes in the session, so it's not sellers trying to aggress, buyers trying to protect. Already they understood what they want to do, and we are building already the position for the day. Now, I don't want to take risk because we are already in profit 11,000 for the day. In 1 minute, the position is risk-free. So we are risking 0 to make 10,000. This is simply a trade that is done low on the curve on absorption. If this level gets broken, we can consider another long.
Pretty usual way to go about it. I'm kind of the same way in the sense of like if I enter somewhere and it's near the low and like the structure gets broken to the upside, like putting the stop break even. Whatever happens in there, so be it.
For the day, let me clear everything that we have here because it's really confusionary with big trades. The point of risk that we have.
No, I'm curious that he does it with the range setting. Never played with that, but interesting.
The potential close of the gap. Because the sellers can try to protect again the gap. So we can consider, we are already floating $5,000. We can consider to take some profit.
I mean, for the day. Hard to say because I'm not experienced enough with this stuff to know how vital this gap filling is or not on this kind of chart setting. But if it's like a typical chart and there's like a gap like that, yeah, I would have TP'd like at least partials right there.
Let's see if we have a reaction. If we see buyers getting crazy aggressive on the upside, it's not worth it to take a position. But we will trail our stop loss as soon as we see buyers getting in the position. Let's check.
And just to clarify for everyone at home, this is live capital.
No, this is personal account.
This is not live capital. So he risked actually $2,000 of his own personal capital, currently floating $5,000 of his own personal capital in the space of a few minutes, which is incredible to see. And you could see, one thing we didn't, maybe do in the intro is, if needed, Fabio won't speak and will focus, but he's done a really amazing job of really just running through exactly what's happening minute after minute, candle by candle, movement after movement, which I didn't expect personally. I thought we would give pauses for Fabio to focus. So that's incredible, level of skill set to be able to consistently, break down exactly what's going on as it's happening while managing, entering and executing.
I took 5,000 out, not still, but stopping profit, okay? Because I don't want that we are going to hold the gap and to give back the market. We are floating 7,000, just is not wise to, we position ourselves here, guys. $0.
Well, I've heard you talk about it before, right? It's not worth you risking 5,000 to make 5,000, right?
Totally not worth. Consider that even now we risk 2,000 to make 8, so we are already risk to reward 4. If we get this take profit, it's a 5R for the day. Considering that also in the New York, in the London session, I took 5R, it's 10R for the day. It's an amazing session. And let me be honest with you, it's not that we shoot 10 sessions with it and we are choosing the best one. We are doing this live. Okay?
I wish I was allowed to spend that much time with you.
So we are just evaluating now the auction of the buyers. It's crazy aggressive. And even without big trades, I can see how much they are protecting. I want to be covered here. We are going to take out 6,000 if it goes bad. But as you can see, this is the first level where the buyers are struggling.
Yeah.
And when we are having a reaction sell, so I will be really tight with my stop loss because every tick down that it takes is like $500 that I give back to the market.
Yeah.
We can expect a squeeze if we get this high and we will go directly to take profit. So as soon as they touch this level, all these sellers are trying to push down, being absorbed. So if we manage to reach 24,987, I can consider already a take profit because I can expect an expansion up. Let's see how they do.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the impact for live Alpha Fab, and then to risk access. Link to
I trace the horizontal level.
He does a stop the same way as the other video, right? Just kind of puts them behind like the big market orders. The only person I've seen do that. Quite interesting.
First level of dominion of the sellers, and this is exactly what's happening. How I did it, because I saw that it's the first time in all this movement where sellers are actually having a result. So it's not about volume, it's not about price. It's about who is winning the battle, okay?
Yeah.
I will take 6,700. As I told you, you will see an acceleration as soon as you reach this level, and you can see what? Aggressive buyers on the top. If the buyers are aggressive on the top, it means that they are willing to pay a higher price to get an asset.
Yeah.
So I can expect a continuation and squeeze. We can see a little bit of absorption here because it's a round number. We are almost at 25,000. It's a psychological level.
Yeah.
I'm not willing to give this money back to the market, so I'm going to cover below the gap, $8,000 in profit, and we see if they can. Already we are close to value area high. So here, done. Okay. 10 minutes in the session, $11,000 of profit. I want to show you a little bit the trading stats of the week so you can understand how I manage the risk in this account.
So just to clarify, it's almost over $1,000 a minute that just took place there.
Yes. So this is my model, NASDAQ model account. I'm going to get from Monday, so we have all the week, it's 13 till today. We are going to generate, so we are in profit for the week 66,000 almost. This is the track record of the week. And I want to clarify something, like the maximum drawdown that we had is on profit, okay? As you can see, we are going to capitalize on the position and risking back our profit. Like if we want today, we can shoot for a $50,000 session. Just we need to understand if it's worth. And I want to show this. This is every single execution on losing trades and on profitable trades. What you can see is that all the losing trades are contained in 2,500. All the best trades are like 6,000, 10,000. One trade was 12,000. This is the only way to be profitable. Like making sure that when you are wrong fast.
Yeah.
So just to do a recap, we took the bottom of the day. We expand higher without a single drawdown. Probably the session is going to continue higher. For me at the moment, there is no trade. This was the triple A setup. Let's see if we can have a breakdown and test trade.
Yeah.
So if they break the value area high. So as you can see in volume analysis, this one is constantly developing with new information. Now we have the up part that is so small because the buy pressure is crazy. What they are trying to do is they are trying to recover the squeeze that Trump did with the tweet, okay? So in this section, what I'm going to use is a momentum model. So if we can break this high, we will see exactly the same that we saw in all our session. So I want to take a small risk here with a buy stop. Why? Because my stop loss will be really tight rates. I can do 4 contract here, and I have an amazing level to cover myself behind. That is this level of aggressive sellers.
Yeah.
So they are protecting the level like crazy. I can have a really small stop loss here.
Interesting.
And I can capitalize on the squeeze. Now, the only risk of the squeeze is the filling level. I can be filled at a level that is not so amazing as someone can expect, because the market just does what we did in all our funny, okay? And I need already to prepare my stop loss because it will be so fast that it can give me an absorption. Okay, we are covered. We are only risking 1,500. We are betting here on the squeeze, guys. We are betting on the squeeze. We are low sides. We are trying to make 3,000, risking 1,560. And as soon as we go high, trail stop loss and get back inside. Why? Because this level is creating a liquidation. there is a big probability that this level will create a liquidation. Now we are getting to the protection level. Why the protection level? You see the area.
It's a pretty risky trade, in my opinion. Pretty fucking risky, right?
Stepping in. Sellers are getting annihilated on this level, absorbed. These are aggressive buyers. What does it mean? That if we reach these aggressive buyers, these sellers will need to close. If sellers needs to close, we have an expansion higher. Okay, so this is the momentum setup.
Yeah.
I'm betting on a long session, and I'm fast in covering myself if I'm right in the position.
Yeah.
Okay, so now guys, if we manage to get high, I need to be really fast at covering and adding contract, because
That's what I was gonna say, because like the thing about like squeezing. Okay, this is like a perfect example. Like, this is a different time frame, but it's the same concept applies. Like, when you get these moves up like this that are like just positions being squeezed out, like this is not natural demand, right? Like, the demand is just shorts closing. So it's like short closing, short closing, short closing, short closing, short closing, short closing. All the shorts closed, at least like in this thing that we had been talking about. And then once it's done, it's like, okay, who's buying this? Is anyone buying this? Guys, are we buying this? No one's buying it, right? And it just comes right back down. So like, if you're gonna take a trade the way he is, you have to be like super aggressive with your stop loss and break even. As soon as it starts going, like move your stop up kind of thing. So there's a pretty realistic world where it reverses like immediately. What's all this stuff doing, by the way? Okay.
To be in the wave.
Yeah.
Okay. Fast. Okay. We cover. Our stop loss is only 1,200. We are going to put it to zero really fast. Okay. Huge
Yeah, I
auction
figure.
higher. Where can we cover ourselves? Below the aggressive sellers. Okay. Now we want to see a big wave up. If the movement is starting, okay, I cover myself here. I'm risking $20 to make 3,000. If the auction fail, I don't want to be in, because it means that the buyers are not strong. What happened here? Sellers to back control. I can try another time here with a small stop loss. Also here. Let's see if we get filled. Now, what I was trying to explain before is how much chart can become cluttered when it's New York session, okay?
Yes.
See how much is dirty.
Yes.
In minutes is really difficult. I prefer to watch 1 minute, but it's again, we are risking 2,000. We are not risking back the profit, not even the profit of New York we are risking. We are really low on the risk side. We want to make 6,000 on this one. Sellers trying to get aggressive, getting absorbed. So what I can do, load other contracts on the potential squeeze up, putting all my risk here, still risking 2,000, but now the potential is to make 7, 8, 10,000.
Yes.
This is dynamic risk management.
But you can see the aggressiveness of the management as well.
It's like this part, there is no indicator that can help you. This is just daily practice on managing position, session by session. And it's really difficult, guys, to explain this while I do, because the mental process is lower than the execution. So I'm trying to do the best. So in this case,
like, I don't...
we give back
to... risky, right? Like, this kind of trades is super risky. But I'm not sure if I'm a fan of that, to be honest, right? Like, you just pierce the value area high after, like, doing a straight up move from the value area low. Now you're betting on it squeezing higher. Better off just leaving like 1 or 2 contracts running from your earlier position than doing that, right? More risk, more reward. No, that's not how it works. That's not how it works.
to the market a total of 2,500 on our profit because the auction is low. You can see the auction is really low in this side. We can try only the limit because you see that they are pushing with aggression on the top. This is the last trade for the day, because if the auction is failing, they are getting back in the range. I don't want to be inside. Okay. So what I will do here is wait for these big buyers to get supported. Auction going back up, covering myself below the low. One stop loss. First position is filled. We can also try to get some limit here. 4. And the last one. So we trail the risk here. And we are trying to shoot for 5,000, 7,000, also $8,000. But we want to be fast in how much risk we input in the market. I want to be fast at putting risk to 0 because this is the most important part. Auction is really slow, guys. This is a really slow session for the day. And this is probably because the liquidity got dry after all this move up that we monetize. So they are accumulating as they go up. Let's see if we can.
If we weren't in the studio right now, would you have walked away after the 10,000 or you would still be looking?
No, I would walk away because already 20,000 for the session. I took a triple A. Just I want to make them participate in all the auction, but this is not healthy for my account. It's just I want to explain them as much as I can, showing all the setup, but this is not how I trade when I'm like, if I get the 20,000 profit for the day, my rules say it's done, because probably you will have consolidation after a strong move. We took the best move of the London and of the New York, we walk away.
Yeah, like, seems a bit weird, right? Like, he's even saying it. It's like, doesn't it seem a bit odd? Like, that's definitely, I mean, an odd trade, right? If this was some like key level on the higher time frame and you're trying to get a breakout like this with a bit more validity to it, but like we didn't really get to see the chart or when this was recorded to like have a reference point. So like looking at like a 1 minute chart and saying like, oh, I'm gonna try and get a breakout squeeze of like this. Not a huge fan. Not a huge fan. We'll say that. But yeah, I suspect he's kind of going with the mindset of like, we have this to play with in terms of house money, so let's try and risk a little to get some more for the sake of the video.
This is how it's managed usually, but you know, we are on the channel, people want to see, so let's do it.
I appreciate that. That's why I wanted to ask though, to just see what the reality would have been.
Yeah,
but it's good to hear.
So this position is not what I like. I'm going to take profit on this one. Why? Because the auction failed.
I was going to say, yeah, what were your thoughts about this?
Fair enough.
So we are back in profit at 9,000 for the session. I will try to build on the way up here, 1 and 2 here. Cover myself here for only 1,600 risk. I remove this one because it's the old take profit. If these sellers get absorbed, is another momentum AAA setup, so we can play again.
Okay,
we can play. Putting all our risk here. Ooh. Okay. Let's shoot for 5,000, all risking $800. It's an amazing trade, this one. We are covered below aggressive sellers' failure.
Yeah.
So we are capitalizing on other trades' failure. This is the model. I'm going to take profit as soon as the market goes up because I want to close at 2,000. So I'm going to bring, no, this one is too low. Let's straight. Now the auction is going. Now they are starting to auction higher.
Yeah.
All these big trades are protecting us. I expect another expansion up.
And what was your settings in terms of the to show as a bubble on the chart? What was the minimum contracts again?
Almost the same. It's 30 contracts. If you are in London, I use 20, but they record that for the community, everything. Like they have a full masterclass of 1 day with me for free. So now we are floating again 3,000. I will take a little bit of profit if we break the high. Because now I start to see that sellers try to protect the top. You see, they are developing a sell candle in the situation of dominion of buyers. So probably we will go back here. And if we go back here, I give back 3,000 to the market. It's not really convenient for me.
Yeah.
But if we break this high, another squeeze will happen. So what they are doing is that these buyers are trying to protect it. Done. Yeah. We took another 2,000 out of the market.
Pretty aggressive risk management though, which is like well played, right?
We took another 3,000.
As you should be when you're doing this.
Bam. 24,300 for the session. We are done in 20 minutes. But guys, no. You know, I like always to be humble, but we took the bottom till the value area high. When the buyers took control, we took some stop loss and they wanted to show how the stop loss are small related to the profit that you can make. And then we took all the expansion higher. I don't think it's smart to continue trading because after a wave like this, zero retracement,
to trade like this
sideways.
Yeah.
And when
It's definitely one way to trade, but you have to be good with your risk management, right? At the end of the day, that's what differentiates most people. Like, it's not like giga brain 500 IQ knowledge. Like, in reality, the difference between an amateur trader and someone that does it for a living is almost always gonna be like risk management and patience.
And go sideways, it's expensive for me to.
Because like, how many trades did he attempt here? What was it, like 4? Like 5 maybe? I got a bit lost in some of the contracts he was adding or removing. But he only took the loss in the one, right? The other one was like either break even or getting back in again.
Trade, because every trade that I open, I pay commission. And on futures are not so small in Interactive Brokers. So just let's do a recap of what happened. The other time on Chart Fanatic, we exactly went through all the models. So value area, high, break, test, these trades. Value area low, accumulation phase. Model 1, Model 2, momentum trades. So we managed to take in your session all the execution that I explained in the model. And there is someone in the comments that I saw, Fabio, you are gatekeeping something. Guys, I don't have another screen. I don't have a phone. You think I will risk $25,000 in one session just to pretend that I use a model? Just this is my personal model and I decided to share for free on this channel. And the result of the views are amazing. And I think we will just, guys, try to squeeze up
pretty common, right?
a tweet of Trump.
It's not like his model. Look at it. It's just the auction market theory.
Almost reaching this level. And I want to show you the perspective on the 5 minutes because all the people are used to trade on the minute chart. It doesn't change anything, okay? What I want to show you, what happened? Huge aggression on the value area low. Full of sellers. Huge aggression of buyers with result. If you are not using order flow with price action, you could have taken this trade here. How much is your risk to reward? 1-1. How much we did? 10R. It's really different, okay? So the reason, because people say it also in the comments, is better price action. It's not a battle. I use price action. But price action is the impact and the result. Order flow is exactly what's driving the price. Okay. The other information that you can get if you want to make a masterclass that is worth $20,000, it's options. 0DTE options nowadays is so important. I didn't use option now, but you can use options to get a sentiment for the pressure. Okay. Options today were completely long. I only watched this at the beginning of the New York session. So just I decided to flow. Which platform you can use? There are a lot of free platform, but there are also paid platform on the option side. For me, it's not worth to pay $300, $400, $500 per month just to know the option pressure. But you can get, I can share with you some links where they can just see if the option are pushing high or low, the pressure, a gauge for pressure. So what we did now is that you can see here, we are completely in an expansion day. The only trade that we can take is the mitigation and the test of the value area high. Considering this huge aggression for the day, I don't think we will reach this level. I think we are going to shoot for the Trump tweet high to squeeze another high. And then I don't know, maybe Baron Trump can try another shot for 200 million. But unfortunately, we don't have insider position.
And it doesn't seem like you need it, to be honest. But just to clarify as well, when we're referencing this Trump tweet, on Friday the 10th, Trump made a tweet out of nowhere in regards to tariffs on China. Cryptocurrency absolutely melted. NQ and everything really sold off aggressively. And then on the weekend, he tweeted, oh, actually, no, it's all as well.
Oh, this is in October then. Interesting.
My dear friend.
So volatility has been increased. Fabio was saying just before we started how, this week's been a bit crazy in terms of trading for him.
Really difficult to trade this one because as you can see, you get sharp moves. You get really hard expansion, really hard. Usually the market condition, like this is the tweet, okay? The market condition that I'm used to trade is this one. Like you build, you accumulate, you expand, I take the breakout trade and the value area low. This one is not a breakout trade. It's a collapse of the universe, okay? And what they did today is that they are just targeting this high. And even my pre-trade model was that today we will push and squeeze this high. We will try to reach at least this level also. Market maker don't like this kind of environment. Okay?
Of course,
Like this kind of tweet is the reason market makers can lose the profit of the month because liquidity completely disappear because they don't want to input risk here. So the price melts. So be really careful with days like this, specifically if you are leveraged on crypto, because you can get slippage, you can get not filled at the level that you want. If you are doing CFD, the risk is way higher because it's on the broker when he want to close you. But be really careful out there. This market condition is not easy to trade. Just what I'm trying to share is that professional tools are out there. If hedge fund and institution use order flow, there is a reason. You are watching exactly what is driving price, fundamentals. So it's not some kind of furu guru stuff that is providing you with a ready-made model. And also, one dear friend of mine told me, look, you are going to do live session. You are going to show people that it's possible to make 5-figure sessions, 6-figure weeks, but you are not clarifying the capital that you're putting in the market, the total account. So I want to be really clear on this. I trade 1 million accounts. It's my personal account. You cannot do $25,000 session getting a small risk on a 100,000 account. It's impossible. And I want also to clarify that what you see here is not only because of the volume and the platform, because we need to be honest in this. It's years and years of reading that brings you to this level. Don't expect that you start to use order flow and you get results like this.
Because it's also fair, right? In terms of like this breakout thing, like, a bit suspicious, but if you are accustomed to seeing that kind of react a certain way, then like, okay, fair enough, right? Like the probability of, like, in my head versus his head is like a different idea. I'm not you're scalping breakouts in the 1 minute or less. I still stick with the original statement that it's a bit sus, especially given you already squeezed like the local highs, but each to their own.
It's not something that is alone sufficient to make you profitable.
Yes. That level of experience and the reps that you have to put in is what develops to what you're showcasing today, as well as obviously capital size that you're trading with. But you know, if someone puts in those reps, the whole purpose really is to highlight what is possible when you've done that deep level work, when you are able to decipher the information that order flow does provide you, in conjunction with, as you've already marked out, you know, just understanding significant highs or liquidity. You know, you use this in conjunction together is what then creates such a result. I think people are blown away by the accuracy, of course, the confidence of execution that you have. But I love the fact that you always highlight the years and years of effort and time and sacrifice that has to go in to make it actually possible. One question I do have in terms of, I'm sure people are asking, maybe you're thinking this, like you've marked out these potential areas that price could go to.
Yes.
Why not just hold your trade? Why not? I know obviously you're a scalper, but why not hold your trade and get this potential bigger target?
I did a lot of research on this, okay? So what I noticed is that you can shoot for high risk to reward, but if you shoot for high risk to reward, you will be completely destroyed in contraction day, okay? I prefer, look, I can show you because it's really important for people to understand my complete model, okay? So on the account, I want to take only from Monday, I took like 100 execution, like total of 100 execution. I want to show you the average winning trade, okay? So the average winning trade is $1,000 on one contract, okay? One contract. Now I load 10, 15, 20. The average losing trade is 600. If I try to shoot to get the maximum high, my win rate will get lower. I already don't have a huge win rate. I have 43 to 49%, okay? But my win rate is based on average and maximum winning trades is $10,000 per contract. The max losing is 3,200. If I want these numbers to go up and down, these numbers will go down. It's a balance, okay? So what I prefer is to have consistent.
Not necessarily true. Not necessarily true. Like, for like in scalping, sure, but in the higher time frame trading, it's not necessarily true. If you're super selective with your trades on like the medium and higher time frames, you can have a high win rate and pretty high like RR rate. But you have to be extremely passive with your trading to do that.
10,000 days instead of having small days like -5, -6, -7, +60. Okay, because if you try to shoot here and you will,
he's a scalper though, so keep that in mind. That does just scalp.
60,000 day. But yesterday in the London, I will have -5, and yesterday I had +10. Okay, so it's always to which kind of approach. You can be a sniper and shoot for the high, but your skill is not sufficient because if there is enough pressure, you will never reach this level. Okay, maybe now we go down. Imagine floating 60,000 in one session and seeing break even. It's a trading approach that I understand. It's more relaxed. But I don't like it because I like to read the market in live as it develop. And if it's necessary, cut my trades. If the market today wants to give me 30,000, I take 30,000. If the market is continuing to action, I can continue to trade and build. But holding one trade for all the movement is something that I was doing before and I was less consistent. I know that it's counterintuitive, but if you think about this, getting from A to B and A to C, it's of course a huge number of different in ticks, okay? this probability in ticks is contained and distributed through days. Look at a day like this, okay? What I will do, I will get value area low and I will shoot for the close. Completely zero. This one is a session that I made 28,000, okay? Completely zero. Look at this week. What I can expect. Down, we go to cover here. Bam, liquidated up.
Mhm.
Oh, we are distributing down, value area high. I shoot down, but I don't want to close here. That is level mark. I want to close here. Bam. Like, I understand what you say, but this model of keeping and holding, it's only working in days of volatility. And you know that there is statistic of the market that 70% of the time the market is stationary.
Yeah.
Okay, I want to make money also when it's stationary.
Of course.
So I'm willing to sacrifice this extra 20,000 to have 70-80% of green days.
And it's also, something to take note of is, as you mentioned here, you might get stopped out, but you'd be right,
Yes.
right? But then what's saying you're going to get the execution?
Imagine how much you bite your hands if you get a failed auction liquidated here and see something. It's really frustrating because you were in profit of maybe 20,000. Now you are -5 for the day and also you are correct.
Yeah.
And then when you enter here, because it was so fast that to get this movement, like you needed to be sure really that the market will continue.
Yeah.
So what this is the approach that I'm having constantly. This is the account that I show on where I do. I call it hyper scalping.
Yeah.
Because every new information of the market for me is a way to monetize it. Okay.
Exactly. Yeah.
So if we go down here, we can check. We took the absorption. Holding. Trapped buyers. I will deploy.
It's super important,
Okay, I
right?
will
What he's
never
talking
hold.
about, if you're scalping like this, it's super, super important to TP aggressively, because when you get like these, that's like it's meaningful P&L, right? Meaningful P&L in these trades. You don't need to get you don't like, what's like the saying? Okay, what's the saying in baseball? Like, get your singles. Like, you don't have to go for the home run. You should take your singles. Because they add up, right? They add up. Like, sure, could that trade have ended up running to like 50K? Possibly. But when you're scalping this low of a time frame, the chance of just coming back and turning into like a balance day is pretty high. Trying to take what the market gives you and just chill.
Till here. Why? Because now, and what it's important for me is now,
And it's a bit preference based. Personally, I always like leaving a bit of a runner. Like, it's pretty rare I close out like a full position at my TPs, just to account for the world where that happens. But when I do, I'm not leaving a whole lot. It's not like I'm leaving like 70% of the position left to run. Like 25 or less usually, depending on like how the TPs have been going on the way there.
the market is bunching on a wall, okay? And I don't want to risk that this wall takes back 20,000. Like, let's put everything in frame. If we hold this trade till up, it was like 20,000 trade, okay? I have my break even here, and someone says, I'm already break even, I don't care. And no, it's not like this, because you are willing to sacrifice 20,000 on the move down. I treat every trade not only from stop perspective, but from profit perspective, okay? The only things I'm
And this is a pretty important point. Like, I don't know if he's going to touch on this or not. Like, another reason it's so important to be taking profit like this is because, like, think about it. Like, let's say you have a 50% win rate, right? And like, you enter a trade and you lose. It hits your stop loss. Like, you're gonna realize that entire loss every time. Or, okay, let's phrase it like this. Okay, when price is at a certain level and you enter, like, you may have edge, but like, let's just look at this in a vacuum, okay? There's a 50% chance of price going up or down, right? It can only go two ways, up or down. So if this coin goes against you and it goes down, you're always gonna realize your stop loss. Whereas if it goes in your direction and your TP is like up here, it might not always make it up here, right? So when the coin lands in your favor, you might not always get the TP that you want. But when it goes against you, you're always getting that loss. So it's super important to be taking profit even when you're not reaching the ideal zones because of this math. Because if not, you're just pissing away your winning trades. Like, if you're like getting stopped out and then break even, stopped out, break even, you're just losing money. You don't want to be too ambitious with your TPs. Like going for like a 10-hour trade every time kind of thing.
If it breaks, I load again, $2,000 profit, and I squeeze another 10,000 for the market. But I'm not giving back the 20,000 that I make. This one is
So
creating
you'd rather build your cushion, build your profit, and then risk your profit only.
is your profit if there are the conditions till we don't go. For
So
example,
right now, there's only two trades you're saying, right?
Yeah.
One, if we break above and then
Yes.
retest, or we
or
retest this.
exactly. And also this trade here, there is one thing that is holding me to take it
Okay.
because we didn't close the structure. This is a movement that the market makers don't like
Okay.
because they are not willing to capitalize on this, and this movement create this imbalance. The nature of the market is to rebalance and expand.
Mhm.
Okay, so this, for example, it's a model of Chart Fanatic that I gave. That is the test of the value area, maybe a little bit of absorb sellers, and then we have another trade. This one is a potential 30,000 additional trade for the day. Getting these trades means that you are betting on the fact that all this will not be a balance, and that these aggressive buyers are willing to break this level. It doesn't seem to me a condition in the market where they can break, because look how much they tried. It's 20 minutes.
Gotta go be back after the trading group, maybe 11-ish. Yeah, I'm gonna be watching this for a bit. Out of curiosity. Yeah, but in terms of like this thing talking about market makers and their fees, yeah, ideally you don't want this happening, right? Because when these candles blast up like this, it's because people like are aggressive market buying into the market. And anyone that has like limits here, like resting limits, got like skipped in the auction basically. Like each one of those orders is an order that they're not collecting fees on. So ideally it rebalances for that purpose, right?
That they're trying.
Yeah.
As soon as we exit the trade here, they stopped.
Mhm.
Okay. Why we exit the trade and they didn't shoot high? Because I see them struggling. Okay. I give an example to the student on YouTube. It's like a boxing match. Okay. Will you ever bet on a winner after 4 rounds, after he's getting completely destroyed? I will never do this.
Yeah.
Okay. Now the market is saying, look, in this condition, the winner won the first 2 rounds.
Yeah.
Now the other one is punching back and they are almost the same.
Yeah.
Okay. I don't want to place a bet. I want to place a bet if we win another round. Why? Because my probability gets higher. I know that it's counterintuitive because traders expect that the more activity you make, the more you hold, the more profit you made. I did extensive statistical research on this, and it's not like this. And you can understand this also with VWAP standard deviation. Okay. The probability that you will get the maximum standard deviation is like 10%.
Yeah.
So out of 10 sessions,
Super low, super low. That's why we watch this thing. Like like getting up here is pretty rare, right? Like let's just scroll back. Okay, like, and this is a daily, so this one's like a bit more probable. But even then, you usually don't see expansions go too far to the red, and when it does, it reverses. Especially when you get candle closes out of it. But when you get to like the weekly and monthly one, it's even rarer, right? There's just like 1, 2. Not even a single time, just the one time this an entire week, one time. Like pretty strong points of reversion at that point, right? And in the monthly, you rarely see them unless it's like the start of the month. Like once we came past the yellow here. This is the October 10th event, so pretty fucking rare. But when it does though, these are super strong signals, right? So highly suggest you use standard deviations on the VWAP. Oops.
Session reach the extreme level. Why you are willing to sacrifice the profit of all the 9 sessions? Build the profit. Then when the market is ready to give you, it will show you. For example, now the buyers are getting again aggressive. Okay. What we can do is try an expansion phase with our stop loss below here, risking maybe $2,000, okay, to make another 6,000 and closing 30,000.
Yeah.
This is a trade we can do, okay, but not when we are getting absorbed, because when we are getting absorbed, like we are betting on the losing side.
Yes.
And I know that usually traders think in terms of set and forget, okay? They execute here and they say, my target is here, I go to eat pizza. I cannot do this. Why? Because I have had too much pain to see risk to reward 1 to 20, 1 to 30 going back to 0.
Yeah.
And when it's personal account and when you are giving back to the market 40, 50,000, trust me that you start.
The thing about that though is like, you don't have to do that. You don't have to go all or nothing. Like if you get into a trade, let's see, like enter here, your stop's like here, and the thing like starts going, and let's say you're TPing like up here, and it starts to like show signs of like absorption up here, you can start to shave out on the pullback, right? You don't have to like sit here and just say fuck it, then just stop that break even. Always good to have like a protocol to start taking profit from a trade if it hasn't already reached your TP, especially when it's the first TP. Like me, like if I haven't reached my first TP, I'm very mindful to start shaving on the way back. If I have reached my first TP, I'll be a bit more chill. Like I'll probably like usually walk the stop up if anything. But yeah, you always got to make sure you pay yourself on the winners.
To take partials,
Yeah.
or you start to get it down. Then of course it's amazing when you see a trade getting the bottom of the day, getting to the top of the range. That is only 20% of the session. Okay, for me it's not worth it to trade like this, but it's totally a personal opinion. I have one of my dear friend, he trade only gold. He does low win rate, huge risk to reward. Okay, this is another model that I can respect. It's not from my side because you have days of the calendar, red, huge green, red, huge green. I don't like it.
Yeah.
Okay, it's just personal opinion. It's like,
Exactly. Yeah. It's being able to handle the reality of the decision you make, right? So like even
that's a fascinating thing about trading, right? So that the like once you know what you're doing, okay, there's a certain set of fundamentals that there is like right or wrong, right? Like, you should not be doing this, you should be doing this. But then there's like the area where you have the fundamentals covered, and it becomes very subjective, right? It's like a lot more personal preference based. Because a lot of things he's talking about are very applicable to scalping, but it doesn't apply to like swing trading, position trading.
Yeah, this trade, even if it was to play out and fit the criteria, in reality, there, if we weren't sat here, you wouldn't be on.
And even for the scalping, like for all I know, that this gold guy he's talking about is like scalping as well, and he is doing that, and it is perfectly fine, right? As long as the math works out in the end and you're making money, it's like no difference.
I will then be.
Do you, when you finish, do you just close it and then walk away?
I close it. I can get back to the market. For example, for what he's doing now. Now I like it. Why? Pushing higher. What happened to these sellers?
Sellers just getting
disrespected. Okay. So now we have a potential squeeze here. This is the only trade that I can evaluate. Let's do another one for the community. Okay.
Surprised you changed like because in the old video, like these bubbles, like I mean the same concept is applying. Like the idea is like the bigger the bubble, the bigger the market order. Like same as like Bookmap. But it seems like the max size is limited to this threshold, because I haven't seen one that's bigger than the candle width itself. Because like I would be more inclined to like buy with this kind of trade setup if you saw like massive orders going underwater immediately.
Really low. How much are we risking? 800. Okay, why? Because if these aggressive sellers are holding, we can get the squeeze at the top. Let's try to close this 30,000. Okay. If we are wrong, it's not convenient for us to continue trading. We can load one on the up, because if it explodes, I'm immediately in profit and it's free. Okay. Consider it's only $800 risk. So we can take another trade if this one goes to stop, but I will not continue because, as you can see, sellers are really good at protecting this level.
Yeah.
Okay. So now we are betting on the fact that this buyer protected and these sellers will not continue the movement. So we are, you see how many times they push,
they try,
absorb, push, absorb, aggressive buyers. What does it mean? They put the lock here. They say, no, bro, you don't go here. Okay. What are you trying to do? It's not the time. So now I start to like it, and they want to be covered immediately.
The one thing I don't like about this, as opposed to Bookmap, is that like you can't see like the limits here. Like a lot of times people will do like best bid offer limits, right? Or they'll like limit whatever current price is. So let's say price is like right here. And like the best bid offer like puts a limit for you like automatically right at the bid, the most like tick right below. So suppose somebody like markets up. Let's say there's multiple market orders, like 1 bubble, 2 bubble, 3 bubble, and as these bubbles are getting printed, there's multiple people doing BBO limit orders. So it's like limit. In Bookmap, you can see these appearing as the price is coming up. So when you see like a red bubble appear for like a seller that's getting trapped, you can see if price starts to retrace back into these like limit walls. it's got a bit better of a visualization of what we're seeing with his tool.
Right, we cover below this,
Yeah.
and it's done. Okay, risking not even if I do $2,080. Okay, where are we trying to shoot for the extra 6,000? The session.
Also
is not so-
unfortunate that the program doesn't like automatically adjust for all the contracts. I mean, it's personal preference. You can manage the contracts individually this way, but in the case where you're trying to scalp on the low time frames, I can imagine like there's a world where this has happened, where he enters a trade and has to like re-update the stop loss, and it's like too late.
Thing to be tried at home because it's not one of the best setup, and we had the failed auction. What does it mean? Again, you see how much buyers they absorbed. Sellers are strong on this level. Now, what is good for us, because there is something that is bad, there's something that is good. If they take back control, they get fucking annihilated. We go directly to target in one candle. Okay.
But this is happening because we've already had this expansion move, right?
Yes.
The move, the AAA setup's already taken place.
Yes.
So this is why we're then seeing price stall at this level.
Yes, exactly. Now, like you had the expansion, now it's like an elastic band. You
Yeah.
cannot only throw. You need time to get it back to normal state,
Yeah.
then you can throw again.
Mhm.
Okay? Imagine like a crossbow or a bow. To shoot an arrow, you have before to do it again. You cannot shoot 2 arrows in one. So this is how the market really moves, okay?
Mhm.
So they are now, it seems like a buy accumulation. It's not the best one, to be honest, but I see that there is a wall here.
Yeah.
Like I'm not taking a trade that is not protected. I'm taking a trade that is protected by a buy wall, okay? On a $25,000 day, what am I risking? 2,000, not even 10%.
Mm.
It's okay. You can build on the profit. But if we break this level, we start to go back in the range, you know that you made what you needed to
Yeah.
make, okay? And for example, now I will be really in anxiety if I see this level not holding and knowing that if it shoot down, I give back to the market 25,000.
Yeah.
Like it's also risk to reward. It's not only when you take a trade,
Mhm.
it's also when you manage a trade. This is something that everyone forgets. You
Yep.
know how many traders are right? They take good trades, but they want to shoot for 1 to 40.
Mhm.
If you close 1 to 3, 1 to 4, maybe you have 75% win rate. But they want to shoot 1 to 40 and they have 90% losing days. Hey, but I'm still profitable because one day in the monte. Okay, is it sustainable to do it million?
Mhm.
Where you see I go and draw down 100,000 to make 10,000. Yeah, but I'm profitable. Yes, but your brain, how does it work? So what happened here? Failed auction.
Yep.
Okay. So we don't
I thought
want
he
to
says
be
that.
in this trade
Failed
again.
auction.
Yep.
There is only one condition where we can be in this trade again. If we break this high,
Okay.
we take the test. But now the market, I know my chicken, is going to go here again. Why? Because all this movement is not efficient. Auction market theory always rebalance movement.
Mhm.
Okay? And this movement is not balanced. It's a huge expansion without testing anything.
Yeah.
So it's pretty risky. Now it's also not clean at all.
Well, in terms of range, I did want to ask, like, what's that based off when you say range chart? Like, what's it?
It's but I like this. It's almost based. It's based on what's closest to the 5 minutes. Okay, 40 range is really close to the 5 minutes. But you see, but I like this one. Wait a second, please, because I want to cover behind this. You see, we are going to auction really good high, and I want to cover here. We are going to have a risk. 1,600 for the last move up. Okay, this is a trade that is worth to do. Why? Because they show me that they went below the structure.
Yeah.
They completely failed. What does it mean? That there is something here.
Mhm.
In terms of passive orders, there is a huge absorption. Okay. Now, position management. Okay. If they break this level, I can put all my stop loss below this.
Yeah.
So I'm still risking 2,000, but now my profit potential is way higher. Okay.
Mhm.
So this is the concept of managing your trades. You see, still 1,400. I can even load 1 contract more. 2 contract more, sorry. Better not from here, but better executing here.
You're showing right now. You're showing how you have to be the speed.
Fast.
Yeah, and we saw how normally you on like a PC.
Yes.
Yeah.
Also, like in the ideal world, I mean, you can hockey this stuff typically. I don't know if his program supports this, but ideally you're doing something where you have this hockeyed, right? So you don't have to sit here and like click, like a little noob.
We're struggling to drag it down.
Yeah, because you need to be fast. And I was clicking on the level, but usually in my setup I have 4 screens.
Yeah.
Okay. Like it's not easy to trade with a trackpad, guys. It's really, trust me. But in my trading room, home trading room,
yeah,
I'm faster. I can promise you. And also I lost a little bit of time to explain.
Of course, yeah.
Let's see how we are going.
If you don't know where the market's going next, stop worrying about your trading. The crypto house is going to and make sure that reps it.
Well, but at the same time, aggressive sellers, again, buyers protecting the level, but at the same time, buyers are getting absorbed. So now I'm not really confident on this. Why? Trapped buyers, so much aggressive sellers. Fortunately, we are risking so less.
Yeah.
This is what keep you, but you need to take a lot of, but I'm relaxed because I'm risking a small portion of profit.
Yeah.
And when you risk this small portion and you build for the day, you are sitting on 22,000. Like, what is the worst that can happen? You close to $20,000.
Yeah.
What's the problem? When you start to be aggressive at the start of the
You
session,
go
where
to the Japan thing when that starts. What Japan thing? Like the person discussing it? But they're supposed to have a speech, right? At some point. A rate increase announcement. What time is it at though? It says it's like the tentative on here. Economic calendar. $10 p.m. I think it's 10 p.m. Is that 1:30 a.m. EST? Is it though? I'm looking now. The governor is supposed to start speaking at 9:30, which is in 9 minutes. And then at 10 o'clock they do the interest rate decision. I'm gonna get some food now in case it does start, just out of curiosity. Do they even speak in English? Do they even speak in English? Maybe we can find a translation somewhere. I'm gonna get some food. I'll be back in like 2 minutes.
into the drama I built. And all unfinished beef, you will soon be killed. Put us together, it's like mixing vodka and milk. I'm going out blasting, taking my enemies with me. And if not, they scar so they will never forget me. Lord, forgive me, the Hennessy got me not knowing how to act. There's a war going on outside, no man is safe from. You could run, but you can't hide forever. From these streets that we done took. You walking with your head down, scared to look. You shook, cause ain't no such things as halfway crooks. They never around when the beef cooks in my part of town. It's similar to Vietnam. Now we all grown up and old and be on the cops' control. They better have the riot gear ready. Trying to back me and get rock steady. By the Mac 1 double, I touch you and leave you with not much to go home with. Or maybe it's the words from my man Killer Black that I can't say, so it's left an untold fact. Until my death, my goals will stay alive. Survival of the fit, only the strong survive. Yeah, we live in this till the day that we die. Survival of the fit, only the strong survive. We live in this till the day that we die. Survival of the fit, only the strong survive. We live in this till the day that we die. Survival of the fit, only the strong survive. Open your eyes to get wise. Look alive. 95, moved up. You know what I'm saying? Going deep,
Y'all know what time it is. Black flag, head done. Real smooth. Know what I'm saying? No spur none. Let's go.
hey, black flag all on my mic. Being broke my kryptonite. Being rich my superpowers. From the south side of FLA, been through Dayton, Broward, musty ass kush on me, smelling like a golden shower. Yeah, I like my weed louder, bitches better, niggas realer. I don't play about my family, about my business, about my skrilla. I don't even speak Creole, bitch, I only speak my mind. In my music major, deaf, then bitch, my jury major blind. Did it all with one flow, niggas used to double time. Yeah, I used to smart talk, but now I had to dumb it down. Straight reconcile, bitch, I'm blowing up the spot. I'm a Carrot City nigga, man, y'all hoes must have forgot. I am not an emo rapper and I ain't no fucking nerd, nigga. I was whooping ass since the first, second, and third, nigga. Hey, black flag all on my mic. I've been known to spend a lot like Bob Barker, the price is right. Being broke my kryptonite, being rich my superpower. Smoking on these bitter niggas, in my hood we call it sour. From the south side of FLA, been through Dayton, Broward, musty ass kush on me, smelling like a golden shower. Yeah, I like my weed louder, bitches better, niggas realer. I don't play about my family, about my business, about my skrilla.
My flag on my stern wheel. I'm so stuck, I'm stern still. Fuck the had a oil spill. This Draco built like Bushwick Bill. Like a
Oh, damn.
I'm a red one radical. Pull out this long nose revolver like
My ear is. Oh. Let's get 30-minute candle close. Okay. Not particularly interesting. This I've ended up doing. Interesting. Another SFP at the poor high. Nice little setup on gas there. Boom, boom. What was that?
don't have profit. Your brain plays tricky games. There is a huge part about the mindset that people don't understand. But when you are in drawdown, you have less clarity. Okay. So your role is immediately to build a cushion for the day and sit on it.
Yeah.
Like a king. Okay. You stay there. The worst that can happen is you lose the profit back. Now, let me comment this. Again, on these big sellers, this is completely dominion of sellers. Okay. So this expansion high that we were trying failed. 2 times it failed. Okay. We still want to be long. They didn't broke the structure. We trailed our stop to make it slow, but they didn't broke the structure. We are still sitting at $20,000. We can, you see, aggressive trades on the bottom. We can still try to get it on the way up, building at the top of the range. But why? It's not that we are getting crazy now and we want to start building, because they show aggressive trades on the bottom, completely absorbed, again, 1,120, okay? The reason I fraction is because I'm fast and I can understand really fast how much am I risking, okay? If you put immediately 10 contract, you cannot build exactly in the level to make the risk always 2,000. Maybe you load everything on the top, the market snap, and you risk 4,000.
Yes.
Okay, but by putting risk in the markets this way, you can still do it. Now, it's getting a little bit dirty. This is not easy to read, but I will make it easy for you. Protection level from buyers, protection level from sellers. Okay? We are covered below the protection level for buyers in this case. We are positioned up in the range. This is not where I should have put my position. I was slow this time. This is where I should have put. As soon as you see aggressive sellers, because in this case, I could have already been break even.
True. Yeah.
Okay. Let's try to shoot for an expansion higher. You see again, on the top of the range, what happened? Buyers, aggressive, absorbed.
Save
Sell,
at the bottom,
absorbed. Okay. So
It's
this is the fight.
tighter,
This is the fight. The smaller compression range gives the best upside potential.
Interesting.
Now I like to put horizontal level on the last protection level. Before, the last protection level was this one. When you understand it, it's not so hard to get it. It's asymmetrical risk. They load again aggressive, again absorbed. Okay. You can see every time they try to go here, bam, 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 bam. Okay. What we can do is get a buy stop here, because if we arrive there, we put all our risk here. So still lower, still 2,000 risk, but more upside potential. This is the game. And also, if they touch this high, it means that buyers won the battle. And if they won the battle, I want to be on the side of the winner.
Of course. Yeah.
Let's see what they can do.
Failed. Yeah. Failed. Defender.
See, the risk of executing a lot of trades is that you get caught in this consolidation.
Yeah.
And you pay a lot of.
And this is why you normally walk away, right?
Why I walk away? Because I take only the best AAA. This one is not a AAA, but it's a setup that can explain to the viewer how you momentum trade.
Yeah. So when you walk away completely? You don't look again?
Don't look again and start to do something else, because otherwise, if you see something interesting, you want to walk. But I'm profit, let's risk something else.
Yeah.
You see, this is destroying the buyers. This means that this is the protection level. Okay. They try to go again here. What's happening? Sellers controlling. Done. Okay. 17,758 for the session, and now again buyers. Okay, you can continue to build up for the day. You can use this 7,000 to make another 25, another 30. You can do it, but not from here. Okay, it's not smart to do it from here. If we need to evaluate a new trade, we need to break, because otherwise, transaction and also these big buyers is not really sitting confidently. Okay, we want to try a last one in this case. If they break. Okay, so we want to see this one not holding. Let me buy stop here, buy stop here, buy stop here. And the other one, I can load on the retracement. Now, what the market is showing me, they have results.
Yeah.
So it means that the level that we used to close our trades was perfect. This level one was perfect. And this exactly, you remember we closed here, okay?
Yeah.
This was exactly when the market started to slow down.
Yeah.
Now we are betting on the reaccumulation phase. That it's a really good trade. The problem is that every time they go to test the accumulation phase, you are liquidated. So you can take a lot of small stop loss, but 5 small stop loss is $10,000.
Exactly, yeah. Now what your
absorption.
Okay. I was going to say, like, what are your thoughts? I know we're profitable for the day, profitable for this session in particular, still. But after taking, I think that was 3 stop losses.
Yes.
Now, what are you thinking? What's happening?
Totally okay, because I risk in a momentum trade that is valid.
Mhm.
As soon as you have a mental process of a setup that can pay you 5, 4, 6 times the risk, I'm okay. Like, I'm not worried at all. Like, we went to 24,000 to 17,000. I'm calm. I know that for the day, we were 24,000, okay? We can still go to 10,000 for the day. So I have still a little bit to risk.
Yeah.
Because I only risk the profit of the session.
Yeah.
So we are up 8,000. We are still profitable for London. We can try to build another.
That's a bit of a fallacy, right? You don't want to just. And the notion that, like, oh, I have house money, so let me be a little bit more careless with it is like flawed logic, because it's really not. It's not house money at that point. It's literally your money.
Trade and close at 30.
Yeah.
A 13,000 trade will be good, but the market is not giving us, and this is important, guys, to understand the condition. If the condition gets this, you cannot watch this and say, I want to make, no, because the market is saying to you, we are in contraction.
Yeah.
We can stay like this 4 hours. What are you going to take? 7, 8 stop loss. So now they reach again the protection level that is on the bottom side,
Yeah.
okay? This one is good. You can bet on an expansion higher. But on this one, I will take a smaller risk. Like, I will not risk 3,000 or more. Not even the time. You see, while I explain, the market already unfolded here. So what I want to do is loading here, protecting myself here. Because what does it mean? That if we reach here, this one won the battle.
Yeah.
If this one won the battle, this one probably is ready for squeeze.
Okay.
Okay. Absorption here. Again, I like it. This is a level where we can cover ourselves. Now, risk to reward wise. Let's check 10 contract here, okay? 10 contract. We are risking 2,700 to make a potential 10. Okay, it's not bad. The problem is that, again, they are not holding. So
Yeah.
I need to cancel. You see how much you need to be dynamic,
Fast
fast and dynamic, and understand how the market is behaving, okay?
How easy or hard was it to be dynamic? You know, when you was developing.
I never
this
played
skill set?
games.
It's
This is
all
like
about
3 APM.
Real execution.
And
Like,
this guy needs to play some StarCraft, right? Fucking like 300 APM or you're garbage.
everyone thinks you need to study on books. Like, I'm not a big fan of theory. I'm a big fan of practice. Start with a 10,000 account. Try to build it to 20, 30, 40. In the process, while you build the account, you understand so many things that you understand also why some trades are not worth for me. Okay. So I'm a big fan of practice.
Yeah.
And for example, now they did an amazing failed auction, the sellers. We can jump in. Sorry, this sometimes I stop, but
Don't worry.
it's really hard to.
No, that's what we're here for. Yeah. This is what we clarified on the Chart Fanatics episode, that was live charting.
Live trading is more difficult, guys,
Yeah.
because you need to be super fast in your mental process. What I saw here is the last point of protection from buyers. So if this one doesn't hold, we are done for the day and we go down.
Yeah.
But if this one hold,
One thing I'm curious about is like the short, because the other video as well, he was mostly taking longs. Now, like in a case like this one, where you see like this many people get trapped up here, a pretty viable short setup if it was happening at like a key level and whatnot. So I'm curious if this guy's like more of like a long base trader than anything.
I'm risking 2,400 to make a potential 10, 15. I can bring the account to 30,000 for the day. And it's not a lot of movement that I need.
Yeah.
Okay. And also, if I'm fast, this 2,400 can go to zero risk really fast. Sellers taking control back again on the level. Now I expect to see these buyers passive showing the upper hand. Okay. So all this area is the protection level that we have.
Yeah.
Let's see how we are doing for the day. Aggressive sellers again. Done. What we can expect now? Acceleration. You see?
Yeah.
Now we are out of the range. Now all the, look, aggressive sellers on the bottom, and you can expect, now we can expect to arrive back here. Okay? Now, what happened? This is important to understand. We took 3 trades, and we took 3 trades that were on the long side and 4 consolidation trades. Okay? In these 4 consolidation trades, we took stop loss really small. We are still $5,000 in profit. This is the power of risk to reward. Okay, this is the power of building profit for the day. Now, in this case, the setup that you can evaluate, the AAA, is this one. Okay,
Yeah.
it's on the test on the upper range. This one is an amazing setup. You can also try to shoot at least for this eye. So this is a setup that can bring you to 15,000 to 40. Continuing to engage here, for me, it's not worth it.
Yeah.
Because it can
So it wasn't worth it for you anyway, personally. It's only because we're
wasn't-
shooting this
It
video.
wasn't worth for me if I was alone, but for me, $10,000 is not changing my life, and I'm really happy to show also how to handle drawdown. Okay,
Yeah.
it's not switching my mood, but it's giving to the audience an understanding of asymmetrical risk to reward and why it's not worth to engage it.
Yeah.
Okay, the next video that will come out on my channel is one session that I started, and I took like 6, 7 stop loss, 8 stop loss, maybe exactly like this. Okay. So the first content on my channel will be my worst session. Why I'm doing this? Because I want to teach them that it's an exchange.
Yeah.
You are putting risk in the market. The market is giving you back something. To make a session of $15,000 in profit, you need to be stoic. You need to be strong enough to
I'm curious because I don't really watch people trade aside from this channel. I don't really care. At least I don't care to go on YouTube and like personally go find channels of people to watch trade. Like I watch this, it's convenient on one channel kind of thing. Just like an aggregation of traders. But I'm curious if like this is pretty aggressive scalping trying to get that trade, right? Like we were talking about earlier how this is like pretty risky. It's the same kind of thing, right? Like I don't know enough about his strategy to like give a definitive statement. But usually this is kind of a general thing for most trading. You're way better off waiting to take like imagine he had taken the one scalp at the start of the day and then just chilled. He'd be up another like 10 grand. And like you don't want to just kind of blindly just look at your P&L and base your decision making off how that's doing. But it's more so to say like that setup at the bottom of the value area low into like trap shorts and then like starting to reclaim the level. It's a high quality setup. Whereas like now you're trying to like get a breakout out of this like small consolidation. Or it might just end up going lower, right? Or higher. Like it's like there's not much edge to be derived here as opposed to like the lower one is kind of what I'm getting at. I'm curious if a lot of other scalpers like takes kind of like hyper aggressive approach. Or if it's more like tailored to kind of him.
to have a 10,000 drawdown and continue your life like nothing happened. This is what they need to understand before, the discipline that it takes. And to build this, you have to go through a journey that starts with losses. This is the reason I wish everyone, they will kill me, they will say that, but I wish everyone to enjoy their bad days and streak of stop loss, because you will bless these days because they teach you how to survive. You cannot be a boxer if you don't know how to get hit and stay still standing on your feet. It's easy when the market, for example, if today was first wave, second wave, third wave, $70,000 for, but this creates in the mind of the viewer of Chart Fanatic a wrong misconception about trading, because they expect that they can do this. This session was perfect because we were precise. We protected our profit. We took 2 AAA trades. Then we start to brag around. What can we do? What can you execute? I want to explain momentum. This is what your brain does in real trading, specifically when you want to merge the educational part with the execution part, because you feel that you need to do. Okay, this is the same pressure that people get when they start trading to pay the bills. No, but I need to make this profit for the month, otherwise I cannot pay my bills. This is what destroys you. It's pressure, and this is what in the World Cup, for example, happened to me. Like,
a good example though, right? Because like I mean, at this point I've stopped keeping track of the trade like a record. Like this is what you mean, right? 2 winning trades, like what, like 5 losing trades. You're still up a shit ton for the day. It's just managing risk, right? More than anything. Don't need an amazing win rate to be a profitable trader. I need to brush my teeth.
South Park, high as fuck like town. Sipping on crack, yellow slap, boy full of mouth. I'm so caught up with the Burberry. Pants sack, my dick out too heavy. Turn this noodle back in the spaghetti, then ride with his body on the hood of the Chevy. FLA, what the fuck is the deal? Bitch, I'm straight out of Texas, we keeping it trill. Got Kill Bill, and we got King of the Hill. I'm an activist, I stay cracking sales, coke, can't get a hit in $100 bill. I'm a delete
You know, it'd be really cool to see that Patrick Neal guy or whatever. Like they're like pretty hyper aggressive scalpers too, but they do it on tick charts. It'd be interesting to see what kind of nuances they use on there, right? Because you don't see tick chart traders too often. I've played with them a bit, and like there definitely is some pretty interesting stuff you notice on there. But it'd be interesting to hear it from like the perspective of someone who's been trading it for like years.
I was trying to shoot for the first place, and I sacrificed that 6% profit that if I would kept, it would have gave me the first place. I still closed with a 500% in 12 months of live execution, but I could have got the first place. Why I didn't do it? Because I want to show to the world how much I can make. This is pure ego. You take execution that are not following the models, you are still profitable.
Yeah.
But the first one was 220%. I closed 220. So you sacrifice the possibility. And this is something that people need to understand. Now on prop firm, maybe it's a little bit easier because it's not your money, you don't care, okay? But when you have a personal account, it's big enough that it's millionaire personal account, you pay this error in cash and immediate. The trading is the only teacher that removes error from you in form of cash and immediate. So be really careful about this. As you can see, big movement. If we rewatch the session after this, it's not worth to trade because usually you have consolidation.
Yeah.
You will see that probably prediction is right. Okay, probably they will skyrocket up, but it's the same as I was saying before. So while you try to take the short, how many times you get liquidated? Okay, this is the lesson that I can give to them.
Well, it goes back to as well what we were saying, or that question I asked earlier is why don't you hold? Why don't you hold? But imagine holding.
Imagine holding and seeing that only this win is 7,000 less.
Yeah,
it's not worth. For me, it's not worth. Like you can just cover yourself. As soon as it breaks, you cover yourself and you trade. Hey, but then it went back and it removed you. Yes, but why I close my trades here instead of waiting for stop loss here? Because I prefer to have a controlled risk, but big winner, instead of having one huge winner, but if it goes bad, I give back all the profit of the new session.
Plus, why would you do that anyway when the concept and the framework of the trade is based on the fact that they failed here?
Yeah, they failed.
And
they
therefore,
completely failed.
You could say give it breathing room, but
like
why?
Here, the trade that I was trying
My
to
fucking
fade,
ear, man.
it's called value area low fade, okay? So it's a bet that you go from the downside to the upside.
Yeah.
There is only one market condition where this trade is not profitable, is when the aggressive buyers are stuck, so they cannot break, okay? So as you can see, also if we tried again here, we will have again take another stop. Is that worth it, okay? Probably we rebalance the session and then we go again up, okay? And this is, I want to show you also something that the stop loss that we took, here from the starting of the session till now. Wait 1 second, I want to show them the single trade. Look at these rates. This was the session. Look how much, they are a lot, but they are small, they are controlled.
Yeah.
Okay. I don't want that a loss can be like this because otherwise it brings back all my profit. And also, this week, this is really important to understand. This week, my equity line of the sell trade, it's almost in drawdown. It's 1,700 minus. The equity long, it's $67,000 in profit. Okay. This is important to understand because it means that in this market scenario, the sell is not profitable. And I know why. Because when you have a huge expansion down, like time trades, okay, the market will try to build again till the level of inflection down. Yeah. Because market maker want to transact efficiently. Yeah. And this is the reason you have building of the session, of the week like this. And then if you join the direction against
the context obviously doesn't matter in terms of like that short stuff, right? Typically, you don't want to be shorting here. Now, obviously, this is like a lower time frame example, but like he's talking about this context. On like the traditional markets. It's the same concept of like the VWAP, right? And I'm sure if you were to go look at the higher time frame VWAPs for like the Nasdaq, for example, it would have been the same story. Well, like these are not the times to be shorting, right? When it gets to these extremes, like no, and probably not for like any relatively reasonable amount of time afterwards, because you're gonna get a relief bounce.
you can build a lot of profit for the session. So as we can see, down. Now it's 5. Usually they move in the power hour.
Yeah.
So usually you see, now we will stay in this range probably for another 1 hour, 2 hour. Then they reaccumulate down,
Yeah.
and in the power hour you go up.
Yeah.
I will show probably. I will show
The
you
power
there is
hour,
another screen of
boy.
the power hour session. Usually they do like this. This is called P-shape in volume analysis. It means that all the volume is built on the top part.
Yeah.
You go back to test to reaccumulate, and you rebalance the profile, and then you continue. This is a model that I gave to Chart Fanatic, and it's this is the momentum squeeze that we took. The second
He's
one.
talking about this thing, like whether you use a TPO or the volume profile, like same kind of concept. Like in this case, it's like a B, right? And he's talking about like a P, which is like not this, but like just to kind of give you a visual reference.
Absorption of the sellers,
Yeah.
and then skyrocket up.
Definitely. Because the other thing to note as well about, why don't you just hold the trade is the fact that you were done in 10 minutes.
And also,
It
interestingly
is-
enough, actually, what video was it? Why is it blocked? Which video is it? I think it's this video. I think this guy, like part of his strategy was like a trading specifically around those profiles. If you want to do like a bit more of a nerd out on them, you can kind of go and watch this video, or just look up a video about like those profile shapes, or just read about them. Well, like in this case, it's like you can kind of see like a trade examples using it.
When you are done in 10 minutes, you need to take and go home. Maybe it will not be the most educational session, but you need to take and go home because it means that the market expanded in the first hour of the session.
Yeah.
90% of the session that expand, they balance till the power hour.
Gotcha.
This is the structure of the New York. If you expand immediately, and Trump is not waiting, you rebalance,
Yeah.
expanding power hour.
Yeah.
Okay. This is the reason 90% of my execution of Model B, testing of the value area after their expansion, is from 7:30 European time till 9, because it's the power hour movement. This is what you can expect. For example, now the market is giving you, because every indicator have a weak point, okay? The big trades have a weak point when you are in consolidation because they are just fighting, but no one is winning at the moment. If we want to add another proxy, we can put the cumulative volume delta. That is the summary of all the delta exchange in the session of the contract. And this gives you the pressure. As you can see, also the cumulative volume delta is not so defined. In the starting of the session was so clear, we are bullish. Now they are selling a little bit, buying a little bit, selling a little. Don't engage here. Don't engage. If they break, we have another trade. Probably not before power hour.
That was the CBD.
It was more than enough just to start off straight away with $10,000 win, which was a 1 to 5.
Yeah, that's a nice thing about
Yes.
trading like this fucking like the futures. It's just one centralized order book, one centralized source for the CBD. Because in crypto, it's just a pain in the ass. You have to watch like the spot CBD on all the exchanges. You have to watch the perp CBD for all the contracts in every exchange. So
Same.
in terms of like the mental, it's way less mentally draining essentially.
You'd already made $10,000 as well, in London session, as well as then after that $10,000 trade, we then took, was it 1 or 2? I think it was 2 more
I
trades.
think it was 3 more trades.
Yeah.
And but it was crazy the drawdown. Like, because when you took a trade, if you can put your stop loss to 0 in the first minute, it means that you are joining the battle on the momentum side. Removing the stress in the first minute is something that is crazy for this field. I do also swing trading based on fundamentals. Everyone says how you can scalp. I want to say to them how you can swing. For me, going to sleep with a stop loss in machine that I'm doing that, I wake up with anxiety.
I bet,
you know?
yeah.
It's different approach. Just there is not the right one. If you are a scalper, you are usually one person that is patient, and this one person that is able to control emotion while you trade.
Yeah.
If you get excited for 5,000, 10,000, oh my God, I knew that I shouldn't have opened. Now I open again. It's not for you. Like, leave it there.
How Have you always been more
No.
stoic and calm?
No, I started with my first account that was scalping the Nasdaq on CFD, and I was always trying to trail my stop loss, but the spread was fucking me up, because the spread is always widening in CFD broker, it. And I was getting so mad that I will execute again if the stop loss was taken by spread. This will destroy my statistics. Like the win rate is way lower than 40%. If you can get 40%, 50, 60% in the best month with 1, 2, 3, like your equity line is like this.
Mhm.
So it's and I've not always been like this. I've been like this when I start to detach myself from the output of the session. Like I don't even watch the performance at the end of the day. I watch at the end of the week. Like for me, a 6 figures week, it's amazing. This one is 60,000 for the week from Monday. It's amazing. And I know that in 5 days around, I win 4 days and I lose 1.
Yeah.
So when I start to see that the session goes bad, the conditions are not bad, usually I walk away.
Yeah.
I don't let the market take 6, 7, 8 stop loss. My rule was 3 losing trades to stop.
Yeah.
Is exactly what we did here. In the starting of the session, I give more room. I have 4 or 5 because usually you have consolidation and then expansion.
Mhm.
This is exactly what I noticed to be the best approach to survive in this market, and also study your market.
Yeah.
This is Nasdaq. Study your market. If you trade DAX, the model is completely different. You will trade in the morning.
Mhm.
So to reply to your question, no, I've not always been patient. I've been really an ADHD guy, wanted to execute there.
Mhm.
But you understand that you don't make more money by being more active. You make more money by selecting better your trades. This
Yeah,
is the best
true.
lesson that you can get.
True.
In terms of your speed, have you always been able to operate at speed when it came to execution and management, or was that something you had to develop and refine as well?
Let's say that you need to be really good, not only at moving orders, but in decisional process.
Mhm.
Like I noticed that trading is really connected to your life. If you are an overthinker, scalping is not for you, because you need to take a decision fast and you need to take full responsibility for the decision that you are taking. Absorb on value area low, they are trying again to auction high.
Yeah.
So you need to take full responsibility for what you are doing, and you cannot overthink.
Yeah.
I have one friend of mine, I try to teach him for free. He spent 1 week with me. He's a person that thinks, this kind of guy thinks over and over and over again.
Yeah.
In the moment that he was thinking about executing a trade, the trade was already take profits.
Yeah.
Like scalping, it's not for everyone. I want always to be clear on this. It requires certain trait of behavior of the person that you cannot learn.
Mhm.
It's not something that you can learn. You need to be prone to have this kind of trading approach, and something that unfortunately
Mhm.
you cannot learn. Not always you can learn. You can be the best at learning the fundamentals, the technicals, but if
I mean, you can
the
learn
way
it.
you
That's
are-
not true. That's not true per se, right? You can learn it, but well, I guess what he means by learn. Like, if you mean like literally like learn by reading in a book, not really. But like through repetition, you can learn.
totally opposite to this. You will only try to fit yourself in a box that is not for you.
Yeah.
Maybe you are an amazing swing trader if you are an overthinker.
Yeah.
Maybe you are the best option trader because you have a rational mind, statistical mind, but it's not for you, this kind of approach.
Mhm.
And you can of course work, but why working to fit in a model that is running against you, And if you are fast in taking decision in life, if you are changing idea fast and have a really low ego and willing to take a stop loss because you are wrong and immediately jump on the train,
Yeah.
you can be an amazing trader that follow a model like this. Yeah.
And what was your process like of learning order flow?
Learning order flow arrived only 6 years after I was trading, because I was trying to understand why a pattern works. I will give you an example. If we have a daily high or a daily low, I noticed that when they spike down or spike up, you have a movement. So now it opens a lot of conspiracy theory. They are hunting. They are ready to take. They want to liquidate.
Mhm.
So I started to study what happens in intra-market structure. So you need to go down. You need to understand. You need to study interaction of the order. And I understood that simply what's happening is that the aggression of the sellers is not as strong as the passive orders.
Yeah.
And you see absorption. You see absorption. You see absorption, and you see absorption. Okay. That is what is happening here. It's not that they want to take your stop loss here. Just they are trying to push down, but passive orders are holding.
Yeah.
By understanding this, my whole understanding of the market did a level up, because I was not guessing, will it be a stop run? Will it be a failed auction? Will it be this? Will it be that? Now I understand exactly what's happening. For me, I can compare this to the switch of driving a car, okay? If you drive with price action, you are trying to drive watching the Waze or Google Maps, okay? But you don't see the street. You just know that you need to go from here to here because the structure is like this. When you start to see car, you can see obstacles. You can see that you are stationary because there is traffic. Why we are not going? There is traffic, there is orders, okay? So
Interesting,
this was a big level up for me. This was an understanding of the
way
market
of
that I
phrasing
never
it.
had before. And this is the reason
I
I'm
like
sharing
that.
so many contacts for free, because I really want to give back to the industry something that is not conspiracy, but something that is really how the market really moves. Like there is an exchange, there is an aggregation of the order. This is actual execution. People pressing buy or sell is not an indicator that is giving you a MACD cross. So this is what changed my life, what changed my perception. And I'm really enthusiastic to share with the world this approach that can help everyone. You don't need to change your trading model. You can implement in all the operational. You can see here again.
Same thing.
Same thing. Buyers trying to guess. They did the liquidation of the high. Now they're going down. Now just they try to press, and you can see from the total orders they are pushing up, breaking. No. Why? Not enough aggression. There are passive orders getting this liquidity that are creating a range, but it's normal if you think about this. Like at the elastic, look how many orders they loaded. Now they are resting. They are breathing. They are understanding what they want to do next. And then you will see either aggression and we go to rebalance and we have AAA for power hour, or they are just saying, look, we want to reaccumulate here because we are pushing, we go up. Now, for you, watching real-time order flow is giving you a better understanding of what's happening behind the curtain.
No, definitely. I remember it changed my perspective the last time we sat down, because it really opened my eyes to how detailed of an understanding you can have, regardless of even trading it or not, just being able to understand why the market is reacting here, what's happening. Because even here, even where we've taken these stop losses, none of those stop losses meant, oh, we're wrong. It's understanding that, okay, here's an opportunity that can generate a good risk to reward idea, backed by understanding what's happening behind these candles and these movements. Because there'll be people who have none of this information, just the candlesticks.
They see
and they'll still be executing. They'll be going, okay, look, below this low stop loss or whatever it may be. And yet, in this understanding, we are able to scale back and take a step back and say, okay, 3 times now, the auction has failed to do anything. The buyers and sellers have failed to take over or any control. So we stop and wait and watch. And we still, off the back of that, have a AAA area below. Timing might be a factor that might not come into our advantage. But we now still have that. And we also have the, if the auction was to break the high, then maybe there's something. But at least we understand, okay, now the time's done. And this all comes after the fact that we had a AAA sell. And profitable result.
You know why it's convenient? Because you know always also when to stay calm. Like when you see orders not having a reaction, it means that the liquidity wall is getting so thick. It's like if you are punching a wall on the upside and on the downside. This is what is happening. When you are here, you don't know. But after 20 minutes that you are here, you know that you don't want to engage. And this is the condition that is creating the best squeeze. Because this can be also a pre-market condition and is giving you momentum trades or AAA.
And what's the reality in terms of, obviously both of our sessions have gone very, very well in terms of the market movements, the predictions, today in particular, live trading, with good size and making a good P&L for the day. What does it look like like this week's been really good for you?
Yes.
But what does it look like on average? The average performance over, let's say, this year. Are you having losing days? Are you having, that sort of, performance?
You are having losing days 100%. But what I'm really good is at cutting the losing days. As I was saying to you, like I have statistics on everything. Like people journal in the weekend. No, people go to dance in the weekend. What I do in the weekend that is really boring, I go through my metrics and try to understand what I can improve. Okay. I notice that the days that start with 3 or 4 or 5 stop loss end up with a losing of 20,000, 15,000. I start to cut them at 8, 9,000. Okay. So of course I have losing days. It's really difficult for me to have losing months. The last losing months that I had was March 2024. And if you go to see, it was like lack of volatility. I'm a trend follower. It's killing me. So of course I have losing months. I work with big capital. So I don't try to get huge percentage like 200, 300%. Usually what I do, you can have a good frame by dividing the performance of the World Cup by 5 or 6. Okay. So if in the World Cup I did 500%, usually in my trading account this year I did 100%. I did 80%. I did 70%. That's still for a private hedge fund, because I'm working with my personal capital of multiple millions, it's an amazing performance. But for a retail trader, it's not enough. Like it was crazy because when I talk about performance, I have to say 60, 70% per year. is not worth it. Why? Because I trade with 1,000, it will be $600. It will not even be to pay the bills. Scale capital. Like they try to scale performance without understanding that the real focus point is how much capital can you manage. And also, it's really important to understand because I received one question: why you?
Because like even
don't open
70%
your
is a
own
lot, right? Like you're outperforming the market by like 3x at that point. And if you do that consistently for a few years, like your account's ramping up. Obviously, you can have like way more outsized years than that. Like way more. But like it's not like a joke. It's not something to laugh at either.
hedge fund, or why you don't go to work with this precision in an hedge fund? The reply is only one: capacity of the strategy. What does it mean? How many millions I can manage without getting too much slippage or having a feeling point that is not so good to the point that is worthless for me to execute.
Takes away the edge. Yeah.
The capacity of the strategy, scalping the Nasdaq, yes, I can diversify with AS, it's around 25 to 40 millions. For hedge fund, 25 to 40 millions, it's peanuts. They work with billions, they work with hundreds of millions. So this is a model that I love, that can be amazing for me. And it's a model that is purely relying on order flow and market interaction. And the reason I'm sharing this with you is because even if you study, okay, you will not take my brain out of me, the market understanding. We are never going to have the same execution point because the mental process and the neural network that you have in your brain is getting deeper in understanding, but there is discretionary. We are taking discretionary decision. What does it mean? We have a model, but we put on leverage our understanding of the model of the market. That's the difference between quant. If my strategy was quant, so I always have the same execution pattern, I couldn't share with the world because in this case, my edge will go to zero.
Of course.
Okay. And this is the reason also. Now, there is still a trick to execute this model on multiple hundreds of millions by understanding that Nasdaq and S&P 500 have a 95% correlation. S&P 500 is a lot more liquid than Nasdaq. I can split my execution and I can work with more capital. Of course, this is possible, okay? But it's important to understand the capacity of the strategy, specifically if you are a scalper and where is your limit. My limit is scalability. This is the reason I'm studying with Andrea option models, because they can give you statistical and mathematical consistent return with scaling with a lot more liquidity. Like I know that if I want to trade 1 million account with this strategy.
Yeah, that's the thing about this, right? It's like a huge drawback of this kind of low time from scalping. Like you can't scale up, right? It's impossible. Like the slippage gets too extreme.
15,000, I cannot make 1.5 million per day because imagine we are loading already 10 contracts, okay? To make 1.5 million per day, we need to expose 100 times more. So here I will need to execute 1,000 contracts. 1,000 contracts, I will bring the market here. So I'm already losing my edge. So this is something really important to understand.
What was your sort of starting capital like?
Especially for those breakout trades, right? Like if you try to take those kind of breakout trades that he's trading with size like that, it's not gonna fucking work. Because everyone's gonna see you just fucking along the top with like a fucking, like he said, 1,000 contracts. You're gonna get trapped immediately.
Capital in 2012 or 14 was made by crypto. Like I always say to my audience that I make a big portion of my wealth understanding market cycles early with on-chain analysis. So I jumped really early on the train of crypto, and I understood, because this model I also trade on crypto. You can imagine with leverage what you can do with crypto. Like I managed to take one single bull run on leverage completely on futures. You can imagine the return. This built the first capital that I had, and I can say that I never hold a dollar. So I have an account for only daily expenses, mainly my capital with this deep understanding. It's always either in trading model, either in long-term options, either in crypto, my portfolio. So even if you understand with 5, 10, 15, 20,000, if you manage risk properly and you have true income, freelancer income, because to get the starting capital, I did a lot of work, okay? I was doing server monitoring in the night, database, from midnight in the night to 8 in the morning, and with 4 hours of sleep during the day, I was starting to trade. So it was really stressful. And with this capital, I understood how to allocate and how to diversify. You have income from trading, you have freelancer income, and you have your cash deposit that is bringing constant because you understand the halving cycles of crypto. So you have 3 forces pushing in your direction, and you know that every dollar that you put in today will be $10 in 5 to 10 years. This is creating an exponential curve, and is what is giving me today the possibility to trade with multiple millions account personal. And it's giving me today more than 50-60% of my income coming from trading. And other than this, I run business. So I have a SaaS at the moment where I'm putting all the effort that it's an order flow platform, not yet started, but I already know that it will be good because it's built by the best traders on the world. So we are gathering all the best traders and saying, what do you think about this? I want to give a shout out to Carmine Rossato. I enter in the call with him and I say, look, how will you make this better? Okay. So when you create something by people that actually make a lot of money trading, it cannot be bad because you will ask them what they need. Okay. Other than this, previously I was doing education. Now I stopped doing education and giving everything for free because education, it's a lot of effort. And at the moment, it's way more profitable for me only focusing on trading. And what I plan in the future.
That's the thing
is
about
to
course, right? It's
focus
like,
on
sure,
hedge
could I
fund
sit
advisor.
here fucking putting together this massive ass course and having to like basically mentor every person I fucking speak to for like hours a day? Sure. It's just not fucking worth the effort, right? Like, how much is someone gonna pay me for that? Like, let's just throw some crazy fucking price tag on it, like $10,000 a month or something. Still not fucking worth it. You can make more trading.
So to be a market strategist and provide models for hedge fund, because this is what I love. I love to create models, either quantitative, either discretionary, either statistical model, and solving the Rubik cube that is the market is always something that gives you a thrill and excitement because you are fighting against PhD hedge fund. So if you can understand, it's not only how much money you can make, but the ability of brain stimulation that it gives to you. And it's something that never stop. You cannot use the same model for 10 years. I always try to refine. For example, you see, I make it hollow because I can see better candles, so I can see the interaction. It's constantly developing. Also because the market is constantly developing. So I know clearly that you cannot put a static model on a dynamic market. It's impossible. Okay, even if we took...
Still back in.
Even if we took a short, or if we took along with a really large stop loss, liquidity.
Still get liquidity,
So there are situations where you don't want to engage. Now, volume can help you a lot because you see that you are still in the range with volume. So price sometimes goes on its own, you know, spike, but then you need to validate with volume because it's the merge of volume and price that is giving you an actual edge.
In terms of when you plot on your volume profile, like where are your start and end points? How do you justify or determine that?
This is a really smart question. So what I have two ways of plotting. Either I do it in compression range if I want to play the ping pong between the area, but the best way to do it for momentum trades is from the expansion movement. So you can see contraction, 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 expansion. So what I do is I plot from point A to point B till the actual price action. What I was trying to explain to you is that we have a P shape because all the volume are concentrated on the top, okay? This market environment cannot go on forever, okay? So usually what you do is you go to the value area low, okay? It will be amazing if they also test here. And then you have an expansion higher. This is the trend following model, the AAA, okay? So all the volume is here. They are reloading from here. This is the level of the value area low. And you always need to understand that you cannot take every swing point, but you need to get the first directional move of the session. If this was pre-market, this is New York session, open, okay? The game plan is done. And then also there is a really good model that is called Orb model. I don't know if you ever heard about opening range breakout, okay? This is a model that if you put in a context, it's really strong. Because the model is saying, look, that this low is not getting touched 80% of the time. This is strong because it's saying to us, look, that you are going to reaccumulate from here. And what you have, this is the last protection point of the sellers. Look at the delta of the buyers, complete control. When we went down, who was controlling price here? Sellers, okay? Now that it's buyers, you see that aggressive sellers on the bottom already bouncing back. We didn't even reach, but you see that sellers have a hard time now going down, okay? So you can try to take in this range a AAA setup that shoot for the 25,163, okay? In this case, why even if I was alone, I will stop? Because we reached 24,000, okay? We went to 15,000. How much is it? It's on the trailing profit of the day, 10,000, 9,000 drawdown, okay? I don't engage. Why? Because the market condition now is getting hard to trade. Okay? So, in case where you really have a AAA aggressive seller, you can still trade. You are trading 2,000. In the worst case, you are still profitable not only for the London, but also for the New York. Okay? But usually the statistics never lie, and you need to understand how to manage your emotion. Otherwise, as a scalper, you will see opportunity everywhere. Like if you don't understand how to qualify and frame them, you will see
the red box
everywhere here.
In terms of statistical analysis, like where did that sort of passion to study that come from, and how helpful has it been for your trading?
When you understand that this number is directly correlated with how much statistical test you run. For example, when you want to take profit, you need to understand the strike point of the take profit, okay? If the VWAP high is here, and I try to shoot for here, I know that 9 times out of 10, it will reject the VWAP, okay?
Yeah.
I ran extensive statistical tests on this, and it came from the necessity to boost the win rate. Because boosting from 30 to 40 to 45, like I have now, percent win rate, it seems like a small number, but 15% win rate more with this risk to reward, it's a lot, Riz.
Yeah.
It's a lot. I have also a trading model on another account, 1-to-1 risk to reward, 75%. Like the equity line is like this because it's consistent, but I know exactly when not to trade. The model that I was saying to you only trades here.
Yeah.
So I switch, when I cannot trade this model, I switch to the consolidation model. Like here, I would have made a lot of money with that model. All these tests, you cannot base on personal perception. You need to have a backing of numbers.
Yeah.
So what I usually do, I export all the data. I put in Python. Python have machine learning, neural network, all the infrastructure to make huge tests. You can know everything about your trading history. And I'm not in a position to take decision based on this. I go to Luca, one guy that helped me on this, shout out to him, and he say, look, Fabio, it's not worth to take trades, for example, after 7, Italian time, European time. Why?
So he breaks down the data point.
Your win rate is low. Like you have 20% win rate. So remove this. Perfect. On Friday, you always lose money. Like in 4 weeks of the month, 3 Friday you lose. Remove Friday. I have 1 day of vacation per day. All these kind of tests, I know for certain that a lot of people don't do.
Of course, yeah.
Okay. So it's giving you an edge. For example, before I had the model on crude oil, the model was amazing, but on Wednesday was giving back all the profit that he made, because Wednesday, the volatility on crude oil, you can check on this, gets crazy. And this was a compression model. We removed Wednesday. The model was profit factor 2.1. It was completely consistent in what you do. So people underestimate the power of data.
Yeah.
So journaling, tracking the data, always understanding what's your metrics. Either you do directly in the platform, either you do in the journal, like you can use Trizella, the one of Umar, you can use everything, okay? But if you don't have data, you don't have a way to improve. If you don't have a way to improve, it's impossible.
Would you say that
True.
also what's super important
True.
is to not only dissect the data? So I just had someone on the podcast, actually, he was a systematic trader,
Okay.
right? So he will take the data. So, from the CFD space, you hear backtest.
Yes.
Everyone always thinks, bar replay, right? You just go back in time, press play, and then, try and do the whole risk reward as if it's live. Well, he was saying how in systematic trading, backtesting is essentially taking all of the data. You have to do a bit of coding. So you can use AI to do the coding, etc. And he uses a program called a Polygon, he said. And essentially it will then spit out based on the parameters he's asked for. So let's say if he said price when it's over VWAP or when it's already extended, he does micro cap stocks.
Yes.
Small cap, sorry. So he'll be like, okay, price has done 100% gap and it's faded and the volume is reducing, stuff like this. And then he'll input that into Polygon. It will give him the statistics.
Amazing.
On 9 years worth of data, 4 years worth of data.
Yes.
And then he now has rules around his trading. So the trading is if A, or if A, B, C, execute, manage, and so on. So all the decisions are based off systematic.
We watched that, didn't we?
Because he goes, it has obviously its pros, but then it had, by sticking systematic, he had a good few years of a rough time, and he had to
have overfitting a little bit.
Yeah, and then he had to introduce some discretion and some of the intuition.
This is important because also Jim Simmons was saying that completely systematic edge have a lot of edge decay. What does it mean? That the system breaks so fast. My strong point on this is that I do.
Yeah, it was the Vancouver
I
guy.
trade. I know that the model is adapt to every market condition. So if I'm not trend following, I don't trade. Okay. I put the power of machine learning on my data that is discretionary. I have the best of both worlds.
Yeah.
So this is the reason I had also a portfolio of system. Then I start notice every month. No, this system 4 system broke out of 20. Replace them. I saw the profit factor. I compare with mine and say it's not worth to trade quant. For me, of course, if you are a Citadel, you have the market making it's worth.
So how many different portfolios or sort of trading?
Yeah, it's definitely worth it. And also like the edge decay is not necessarily rephrase this. Ideally, when you're algorithmic trading, you're not just doing one specific like algorithm, right? You're diversifying with like multiple. So like in the world where one does start to underperform for whatever reason, whether it's just the changing market conditions Or it's just like the edge of it has started to erode over time as they're describing. You still have other ones going. Definitely worthwhile though. I think it, and not maybe this is a bit of a bold statement, but I think everyone should try to algorithmic trade. Because that way you're like forced to understand the math, right?
And systems do you have?
I have a lot because I diversify them by edge. For
Okay.
example, this one is hyperscalping.
Yeah.
Okay. If I want to do intraday trading, I use another portfolio because I need to track independent data. Otherwise, I cannot do all the research.
Yeah.
Option
Like
model is
that's why
another
for the
brokerage,
algos, I
Charles
trade
Schwab.
them on sub accounts. And then that when I export all the data from like the site, it's just like only specific to that algorithm. That's what most people do actually. Like I at first I didn't know that option existed. Once I found out, I was like, oh damn, it's just so nice. But at first I had to manually parse all the data myself to like remove the discretionary trades from the algorithmic ones, and it was such a fucking pain in the ass.
Also, Andrea, Charles Schwab, we have separate account for everything we need to do. Crypto. I don't want to publish any crypto exchange or brokerage, but I do on another field. Holding, ledger. Like I separate, like if it's a different business model. No?
Yeah.
Like I don't want the data from deep charts to merge with the data of world-class edge.
Of course. Yeah.
Because I don't have clear margin, I don't have clear execution. Like people that trade everything in one account, for me, it's inefficient. Okay. So I have separate account. I have the option account. I have the futures order flow, crypto scalping. I have the long-term investment. I have the stock picking account. I have I love to create models. Okay. I have the Nasdaq scalping. I have the Nasdaq intraday, and I diversify capital. Okay. This is 15,000 only on this model.
Yeah.
Okay. The option model is making 8,000. The crypto scalping with the run up is making another 9,000. This is compounding. The only thing that I don't accept is to put a model that is not beating the Sharpe ratio or compare with the Sharpe ratio of the other. Because if you put a distribution and if you see that you have 6 models with an amazing Sharpe ratio and profit factor, and you say, let's put another model just to diversify, but the Sharpe ratio is here, it's not worth for me.
Of course.
So I have like a Gauss distribution of the edge with all the edge that I put in the market, and I optimize and always monitor them. If a model is not profitable anymore, I remove, and all the other one recover the loss that the model did. It's an amazing ecosystem, you know. But still, the most profitable one is Nasdaq. Like there is nothing comparable to order flow scalping for me. Also on crypto, it's extremely profitable,
course,
but nothing algorithmic of option comes close to this.
Okay. So when it comes to the crypto, is that when you say that's profitable, is that the long-term investing, or is that even the do you do like the future?
It's very true, right? Like I have the same experience with algorithm. Maybe we're just not making the best algorithm, right? But the thing about algorithmic trading is that yeah, you don't have the discretionary aspect working with you. Because it's just saying like X, Y, Z, if true, take trade, right? But there's a lot of things that you're not like. That's a lot of data it's not referencing. It's not monitoring order flow, for example, or it's not monitoring like liquidation clusters for like things like that. So there are times when the algorithm will like trigger on these statements all being true. But if you were looking at it as like a human, like you would know like, okay, I'm not taking that fucking trade right now. It's stupid. The algorithm just does it anyways because like it's just based on the stats, right? If you do this repeatedly over and over and over and over and over, you make money. Even when you don't account for like these fail situations. But yeah, I think discretionary is definitely the way, the most optimal way, right? Because it's much more nuanced to avoid trades that you shouldn't be taking that algorithms do take.
Imagine like this. I use the futures order flow scalping crypto as income. I use this income to funnel in my long-term account. The long-term account does only arbitrage and investment. Okay, arbitrage is getting profit for small inefficiency. Okay, it's quant, and is making not a huge amount of money. It's making 20 to 30%, but market neutral. And then on top of that, I have a complete understanding of presidential cycles, halving cycles, intermarket correlation to know exactly when to allocate capital. Like if I expect that Ripple will overperform Bitcoin in the short term, like what I did, I put 40% of the portfolio in Ripple, it went to $1.2 to 3.5. I liquidated, put it back in Bitcoin. You know, this is the stuff that I do. I'm always active on this, and it's purely based on data. I analyze on-chain data. On top of that, all the profit that I made with crypto scalping, order flow, goes back in these accounts, so they grow long term. The daily profit that I withdraw monthly is funneling here, so I have one ecosystem, crypto ecosystem. Then I have the order flow ecosystem, Nasdaq intraday model, Nasdaq scalping model, and options, okay? Because options can be also intraday. They can be 0DT.
Yeah.
And now we are building all kind of model with Andrea. They are crazy model. There are models that can yield 80%, okay, per year. It's huge. Of course, the problem is still liquidity.
Yeah.
You can do with 5-10 million. You cannot do with 100. Then you have the long-term investing, so like stock picking. So what I do in stock, I'm giving a lot of edge, guys.
I know, yeah.
So on stock picking, what I do, I built on my own
Market's
rules
pumping. Yeah, we'll see. We'll see how it ends up going. Yeah, these things are definitely going. Get rid of this thing.
can predict which stock is going to overperform the market. Now everyone will say, oh, it's impossible. So it's possible, okay? What I do is that I exploit one inefficiency of the market. What is this inefficiency? Congressmen of US, they have information. This information is not getting
Yeah,
punished because
on
they-
Unusual Whales, there was like a whole tab dedicated to just this. The U.S. like senators trading and whatnot.
they are allowed to do insider trading. So if they are allowed to do insider trading, I'm allowed to use their trades as information because it's completely legal. It's public available information. Not public, you need data sources, but you can work your way through. On this, I put my earnings model. So now what I'm doing, I'm getting the trades of the most powerful people on the planet, but I'm timing better than them using earnings model on intraday gap. It's going crazy, amazing. Like the track record on the brokerage, it's now we have also to say that S&P 500 and stocks are expanding, but still I run extensive tests. It's profitable also in rough times where the stock market goes down because you go on the defensive, you go on, like I love to do it. This is the most funny models that I have because you need also to understand why they are buying. So maybe you see the politician that buys, I will not make name, the politician that buys 3 million with private account of one pharmaceutical company. After 2 months, they approve the stage 4 of the company. You see like 200, 300%. This is something that from my side is not ethical that they can do this because they have a role in approval of this stuff. But not using this kind of information is unethical for my side. Why? Because these are public information. So if you are a trader, your role is to get always the most informed player of the market. If I ignore this data, I will stay behind all the people that use this data.
Yeah.
Wasn't there news
This is my
today
stock
about them like
model.
looking to ban this? I mean, I know they've been trying to like push this for a while, but isn't it like getting closer to like actually becoming a reality? Where was it? Hmm. Oh yeah, I was on Unusual Whales. House Democrats are preparing to file a discharge petition. What does that even mean? A discharge petition on a new stock trading ban for politicians. But funnily enough, my friend used to do this. He had like the Pelosi tracker. And whenever she would fucking buy, he literally copied her every single one of her trades. I thought he was joking at first. And then one time we were at the gym and he got the notification in the middle of a workout. He like, as soon as the set finished, he went and did the order in front of my eyes. I'm like, oh fuck, this guy's actually dead ass serious doing this. I'm in disbelief.
It's a little bit complicated. There are 4 models running at the same time, but it's profitable.
How do you manage all these things then? How do you track and manage all these different portfolios?
Like the stock model is so easy because I go through it on Sundays. Okay, so I prepare and do everything on this on one day of the week. It takes 1 hour, 2 hours because already the AI is doing a huge work on this aggregating data. I have my own platform that I built through the years that is making all this analysis. The option model, Andrea and Enrico, that is one of my mentor, built structure that you can do with 10 minutes per day, all in the evening, all in I was saying something that I cannot say, all in certain time of the day, all in certain time of the day, and they have a huge profit factor, and it's not getting your time, it's not getting too much of your time. Okay, so the models that take the most of my time is Nasdaq scalping, but it's also the most profitable one. So also in time allocation, you need to understand. Okay. And in the weekend, when I'm bored on Saturday, I do crypto order flow because we need to work. Like we need to. We reach the level.
Yeah, we were watching it in the background. I'd say, should we do like a recap of what's happened here?
So what happened here is that from the level of absorption that we were watching, they contracted back to the level that we were waiting. That is the AAA setup based on absorption. From here, it's a little bit early, but in 2 hours, you can expect that from here, they accumulate and go up.
Okay.
And we will check how it goes. But it's, you see already, they're really struggling. I don't know if it's visible, but they are really struggling to go down. It's the first time where they reach one level. And why they're struggling? Because this level is packed with aggressive buyers.
Yes.
Okay. Now they will start they will touch the closing of the structure. And this is where you can expect a lot of aggressive sellers interacting and buyers trying to protect. Okay. So here you want to see buyers stepping in to protect. If you don't see it, done for the day and it's not done. You see, for example, here, I will never execute. They are controlling aggressive, 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 aggressive. This is like the momentum buy that we took. Buyers are trying from here to stop the movement. Now, if you get a complete absorption of the movement, you can try, like you were saying, the expansion up.
Gotcha.
You can try this trade, but the problem is that you have a really big stop loss. So you can cover here. I will not execute it. I will only put the marker to show. Like if you put
10 number shorts, right? 10 number shorts.
Here, okay, at the break of this high. Okay, so at the break of this high, these trapped buyers, you can execute. You have 10 contract for a 2,500 is too much. We need to lower the size. We need to go on 8 contracts. So now you're risking exactly 2,000. Okay, if you break this level, you have display. You can cover also below here by putting lower size, but already you cannot execute, you see. Control of the sellers again, trapped buyers. So the AAA setup didn't present itself today.
And again, back to that question from way earlier, if you held your trade.
Like, imagine
that pain.
Imagine we arrive here, so we closed here and then build another position. Now all the profit that we took is almost zero.
Yeah.
So we go back to the question, like, is it worth it? If you have a really high win rate, but honestly, I do a lot of talent scouting. Like if I see someone that is profitable, I always took the time to jump in a call with him and understand his edge, because maybe in its capital, maybe in its direction, but I've never seen an edge that is having at the same time a lot of win rate and a lot of risk reward. One needs to be sacrificed.
Yeah.
And I mean, not in 1 month, but I need on 12 months. Okay. So you cannot have 1 to 20 risk to reward with 75%. If you have, call me because you are soon billionaire.
Yeah.
You are soon billionaire. But you need to choose what you want. Okay. From my side,
there are people that have that, right? There are people that have that. They're in market wizards. They're in the book. The thing is, those people, like I was saying, like they're extremely selective. Like they might be taking literally like 2-3 trades a fucking year.
Good win rate, good risk to reward.
So it's hard to compound an account doing that. Very hard.
We will have close, probably also in loss, because with this, then it cut all the profit of the previous one.
Exactly.
You are like we were attacking now the profit of a London session. It's really bad. It's better to take profit.
And again, just to really reiterate and get that point home, that's why I asked the question, to really see the reality. Now, Fabio, if we weren't here in the studio trying to make this video and to showcase live trading, he would have been done after that first trade,
Yeah.
right? Or the first setup trade, that first movement.
The directional one, that was 1 to 8.
Yeah.
The momentum one, we closed 25,000 for the day, it's done. But I'm really happy that we took this trade because the audience can now understand and frame which kind of condition is not yielding a profit for the strategy.
Yeah.
So contraction,
Mhm.
that's the reason we only trade here and here.
Exactly.
Okay. So it's, I think with the previous
Into the
one,
building,
this episode,
compounding
and
is
the
the
ones that are
aim.
going in my channel, they have a masterclass that outside will cost at least $10,000.
It's not necessarily true. Like, a billion's like not that much. But he was saying like, if somebody had like a 75% win rate with a high RR on their trades or like realized R, then like call me because you're a billionaire kind of thing. But what I'm saying is like people like that exist, but they're not billionaires because the trading frequency is too infrequent. And like also like imagine, think about it. Like let's say you take 4 trades a year, and one of them ends up being a loser. And like and you're putting in a lot of size into these trades because of how frequent they are, well, that can be pretty damaging. They're not guaranteed to win. Like people have like 90% win rates and whatnot, but
It's totally free.
yeah, for like a big fund, like a billion's like nothing, right? It's like 1% of their capital.
Mhm.
You can study, you can try with price, because this model, the good part is that they work also on price action. Like if you know what is an expansion phase and contraction, you can, for example, wait for the recovery of the top and get the expansion higher. You are not this is what I want to enforce. You are not forced to use volume.
Mhm.
I use volume because it helps me to understand. But for example, for Forex, it's useless because volume is so fragmented in 1,000 OTC sources. If you trade euro dollar, British pound, it's better intermarket analysis.
Yeah.
You watch euro dollar, you understand the pressure of British pound, you understand the dollar, and you have a context of accumulation phase, distribution phase. You see maybe
that must
they
be so
spike.
annoying. I'm surprised people trade Forex, right? Like learning about that stuff. Seems like a pain in the ass. It's like worse than crypto. Because some don't even have that data.
Hello, they failed. What does it mean? There is an absorption.
Mhm.
You can understand by price this stuff, okay? But volume on indices and on commodities, it's amazing.
And one thing I was going to ask actually, in terms of handling all these different portfolios, you're trading obviously weekdays, Nasdaq, hyper scalping.
Yeah.
Your Saturday sometimes when you're bored trading crypto. You got the portfolios, etc. What's the reality for you in terms of your, outside of when we see you in the studio, outside of your trading windows? Like, how are you operating? Do you have to sell up your whole life to facilitate
Yes, this is
peak
something-
performance?
This is something that I was hoping that you would ask. Guys, there is no coconut with straw on the beach. I moved to Palm View at the moment. I have one of the best view. I've never been to the beach. We have a private beach. I've never been to the beach. Why? Because this kind of lifestyle is sacrificing. I'm not only saying, okay, you have money, you cannot. No, because now I go home, I need to prepare. I have lives. I need to prepare the long-term setup. It's a lifestyle. It's like a bodybuilder, okay? They build their life around their work.
Yeah.
I build my life around my work. I have something that I cannot sacrifice. I cannot go out drinking, drifting with Ferrari, and the day later I wake up at 10 because I have stuff to do in the morning. And the only way to manage this life is being completely with obsessive compulsive disorder
True.
of organizing stuff.
True.
Everything needs to be a
True.
clock, okay?
Mhm.
Because if you stop organizing this way, confusion will overcome you because you are managing multiple models, multiple company. You are at the same time trying to have a little bit of private life because your family wants to see you, something like this. So it's draining.
Mhm.
And this is the reason I want to go on long-term, low commitment model options because my capital is getting really high at the moment. For a retail, it's really high. And I know that I can already retire. Like I'm 30 years old, I can retire the next 5 to 10 with an amazing life without staying all the afternoon in the chart. It's what I love, but it's draining.
Mm.
Doing this every day, it's really stressful, specifically scalping. And I know that I will never stop, at least to watch, because I love the market. I love
That's
to
what I was going to
understand the
ask.
market.
Yeah.
But
I was gonna say, like, you
like-
have to like trading, right? The people that get into trading only because they want to make money, I can't imagine too many of them end up lasting.
it's not
Like you have to enjoy. You have to enjoy what you're doing.
that people
money's
expect
just like
to
a-
trade. They
like a-
expect you make
a
your first
side
1,
effect
2,
of
3
it.
million, you walk away and you only enjoy life. if you do this, inflation will fuck up all the money that you have made,
Yeah.
and your life will be like this only for 1 or 2 years, and then you will go back to the rat race.
Yeah.
And it's a lifestyle. It's a lifestyle that I love. It's not heavy for me. Working is something that empowers me and make me feel productive, and it's not heavy for me at all. It would have been to break even now.
Exactly. Yeah.
So we would have lost all the profit for the day. So this is an amazing lesson on how to manage also your position. This is an amazing lesson.
It was incredible, honestly, to see the speed. And I think you did a phenomenal job of explaining what you were doing as you were doing it. Because I remember when we had discussed on the last Chart Fanatics, we said that this isn't live trading because live trading I need to be logged in. So I was actually expecting me to kind of narrate or whilst you're trading, and then when there was an opportunity to pause, then talk about it. But you managed to do both.
If we didn't have to explain everything that I was doing here with this position, I would have loaded another 10.
Mhm.
So we could have made 40,000 on the way up. But doing this means that you load 2 contracts at every breakout.
Mhm.
It's impossible to do this. Manage the stop loss at the same time explaining what you do.
Yeah.
But there are more aggressive way of management that on this movement could have made a $40,000 day and also on the momentum, but it's just impossible to trade, explain, watch the camera, like it's not doable. But I hope that they understood my model and they understood how it is that I work every day.
Definitely. And the one interesting thing, actually, just to frame as well, before coming here today, when Fabio, we were planning to just do a normal podcast, and Fabio mentioned, why don't we do this? Why don't we trade this session live? I know, and we love it as well. But he did say, like, look, at the end of the day, I'll trade live capital, I'll trade my personal account, and I will win or lose. Like, I will just do it. Even if I lose on the day, we'll still put it out. If I win on the day, we'll put it out. And I was happy as well, even though we, for the recording, still continued to trade and we took some losses there. I'm happy that we kept that in there. I'm happy that we did that. And that's why I asked you that question, like, how do you feel after taking those losses? Because in my head, I'm like, oh no, we've taken losses. We need to win. But that's me.
Oh,
right?
No, it's not like in my head. I came here saying to Andrea, I hope that we will have a drawdown session. Why? Because you can teach 10 times more stuff if you have a rough session. This is the reason on my channel is coming the worst session of the month, okay? If everything goes good, you don't have to explain, but getting a reason why we stop executing trades when this move happened, okay? And seeing that when this move happened, exactly was the top of the day, is letting them understand that when is the moment to stop, okay? You are not, like, we are still in profit 15,000. If we risk on this way down after the break, the short from here that I was sure was coming here, okay? On this one, I will zoom. From this movement, aggressive sellers, stop, we could make this movement, risk 5,000 of the 15,000, close at 30, 40,000. But still, I will do something for ego. I will not do something because it's my model.
Yes.
So what I show you is the raw reality of trading. I took profit and I took stop loss. This is the real Fabio. This is the real trading. There is no sugar coating. There is no, let's do 5 sessions and load the best one.
Yeah.
No. We don't do this stuff. And I think anyway, we have a London session of yesterday that was amazing, that we will share with Chart Fanatic, and was something like this, but done in London without needing to explain, because I can comment later. So managing super fast.
Yeah.
And I mean, like 10,000 risking 1,500.
Incredible.
So it was really an amazing one.
Absolutely incredible. Do you know, in terms of the reality now, do you ever have times where you break your rules or go on till or revenge trade or go outside of your system?
It's really difficult because I know the price of breaking the rules. Like in my setup in my trading station at home, there is one quote that is, either you respect the rules, either you pay the price. And I have a screenshot of the statistical model on Python of how much I lose when I break the rules. Okay, so it's always there with me. And when you see me, yes, we are live, we can risk 15,000, close the day, 100,000, 6 figures in one day. No, because I know that if today I give back this 15,000, tomorrow, if I lose 10,000 in session, I will be in loss. I will not have the amazing week. Like in the week, we are 60,000 in profit in 3 days. We still have 2 days to go. It qualified to be a 6 figures week. Why I need to break the rules for ego to show? It's not worth it. At home, I don't do it. There is only one time that I did, was last year, because I had a really difficult situation at home. I received a really bad news and I was not with mental clarity to manage. I took full responsibility for what I did. I get back on track and in 1 week I recover everything. But this loss is screenshot and it's on my desk to remind me what happens when I go far from the rules. Because
same story every time, right? Every fucking time. Everybody has that story. Just like the one stupid loss where you're just like, fuck, never again. And then you just fucking stop, right? This makes you sick to your fucking stomach when it happens.
So what's the reason of doing all this work to build? Because building an edge is the start. It's not trading, guys. Building an edge or building the experience to have an edge is the real work.
Yes.
So why not respecting rules if you have this? Then you can also put some rule to yourself. Okay, so for example, what we want to put in the platform is to not be able to trade when you get a trailing drawdown for the day. Like if you're profitable 40,000, you get -5 or 10, the platform block you. You need to call the support and say, unlock my account because I want to trade. This is something that is a mechanical stop to the bullshit that you can do, okay? But when you are professional, you don't need stuff like this. You just need to have a conversation with yourself and say, look, for ego, I'm burning a $60,000 profit week for what? To be able to be right on the movement. Who cares? Like people on YouTube, I understood something that is really funny. Like one guy texted me and says, if you really want to give back to the community, you will sell a course. Say, look, if you sell a course, you are a course seller. If you only trade, you only trade. You don't care about the community. What a person need to do. Like I'm giving everything for free, study. You don't need to pay anything. So I understood that you will never be able to make everyone happy in life. Okay, you will always have haters. You will always have. So the only thing you can do is stick to your plan. If they like the plan, they see the reality of what trading is. Of course, there will be in the comment, but I trade stop run liquidation 1 to 100. You are not able to trade. Take the critics and go on, but don't trade for eco because it's what is burning your account, or don't trade to demonstrate someone else that you are worth it, because this is what really destroy. Oh, they are also breaking the law. Huh? They are.
This is the thing.
What I like here is that the order flow is keeping you out of the setup. Like a pre-action trader maybe will.
Because they made it, missed a short, right? We were talking about this way earlier, but there's a couple of juicy short potentials up there potentially.
Buyers absorbed. No order flow trader will consider this. You can consider the short to the value area low, and also this one would have been an amazing trade. Okay? So it's possible if we trade all the session with capital to close 50, 60, 70. Just not worth it, because the risk is that here you get another consolidation like this, and you are done.
So even when you set your life up to operate and be efficient, right? You make those sacrifices. Let's say there's a day where you've had you're ill, right? Or you've had a bad night's sleep, or maybe something's happened.
I don't trade, it's not a problem.
Yeah.
Like I just walk away, I don't trade, because also on this I have metrics. Like when you trade and you are not in a sharp, remember that my edge is discretional, okay? So if you are not sharp, you are tired, you didn't sleep good at night, you are putting your capital at risk.
Yeah.
Like the lack of focus can burn $20,000, $30,000. Like when you work with a big account, you are paying big money for errors.
Yeah.
So just, it's not, I walk away, look at it, the law of large number is giving me an edge over 100. Like this week was 120 execution, okay? Over the year, I make 5,000 execution.
Wow.
If I lose 3 or 4 trades, nothing has changed. The performance will be there. Maybe I'm lucky and I lose the bad day.
Yeah.
Maybe so it's just, you have to consider that
trades.
time allocation wise,
5,000 in a year?
It's better to not be at the market.
How much is that per day?
It's better to not be at the market, because the edge, it's you.
Yeah.
If you were a quant, you make your system run. So it's not a problem.
And what do you do then actually for downtime? A lot of people.
The market's only open like how many days in the year? Like 52 times 5, that's like what? 250, 260? Trades a day almost? God damn. God damn. That's a lot.
They'll do the drinking, they'll do the partying, they'll do things that go on till the late night.
I love to create stuff. Like for example, recently I'm spending 30 minutes every evening researching information and data and aggregating them with alternative data sources to understand if I can have an edge, informational edge. Okay, creating this. I know I'm a nerd on this. But I love to do it. Like I really enjoy. If they say, look, today you cannot earn money with this. Okay, you only will live out of business and other stuff. I will still be here every day because I like to. For me, it's like chess. People play chess not to be paid, but because it's stimulating their brain.
Yeah.
For me, financial markets is the big chessboard on the planet. You don't have one opponent, you have the world against you, but it's so fun and stimulating for me. And of course, in my free time, I like to go with other traders and friends that they are stressed to Spa, to Banya, Russian Banya, and stuff like this. But I always have a way to keep myself occupied, and I'm not a party guy. Like I don't like to go to do shopping, to go to do partying. It's not for me. I've never done this before I had money, and I've never done this now that I have money. It's just not fun for me, okay? So that's what I do. I prefer to spend some time with friends and something chill in the free time. But my free time is really low, to be honest. Places. There is not a lot of free time. But also when people see that the perception that they have of financially free is really different from the truth, because financially independent and rich without working, like it's really hard if you start from zero. Like if your father is not leaving you real estate worth 50 million or 100 million, it's really difficult. You always need, also if you delegate your business, a little bit of interaction, daily calls, weekly check, it's necessary to run the business. So getting a different perspective of what trading is, a professional one, and how much sacrifice you need to make this really your profession, I think is something that the industry really needs at the moment. Because we saw, I don't like to make names and I will stay on my own here because I already received enough threatening, but a lot of people open white label accounts, they forge track records,
What's
and
that?
they make money with everything except from trading. Okay, they make money with the surrounding of trading, but not from the market. Okay, the real skill is able to making money by understanding and predicting what the market will do next and adapting. And finding a real trader that is also willing to do this publicly or willing to share with you in real time is something that I've never found when I was trying to learn the profession. Okay, if you want to study, for example, medicine, you go to a real doctor and you have a university. But if you want to be a real trader, out there you find a lot of fake gurus. So it's you also don't have you don't know which expectation to set. If people continue to sell, get rich with $1,000. People will believe this is possible. So the problem is not the expectation of the people, but it's also the communication of the industry.
It's very true. And in terms of your personal journey, you mentioned earlier having a mentor. Like, what did that look like for you in terms of trading education? Did you do a lot of self-teaching? Was there mentors that helped you? Like, what did that look like for you? And how did you pick your mentors?
I took a mentor in the moment that I was already making a lot of money, and I wanted to scale with Edge with one person that was managing a family office of a lot of money. I cannot say the amount, but was okay. So I took a mentor because I wanted to be able to diversify from the model that I have and get models that run without me. So I took a mentor on different market on options, but on order flow, I never had a mentor because what I did is spending weeks watching price and understanding in my brain what I can expect after I see every move. Okay, it's pattern recognition. The difference is just that people do this with candles. I do this with deeper information inside candles. But I think if you put someone and you say, look, watch this for 1 month, don't execute. Sooner or later, then we start to see that certain pattern of order flow have an edge. Now you have a model. Start to execute on a demo, plot this in a statistical distribution. Now you are a trader. Okay,
You can't avoid the work, right? That most people try.
That's the reason I don't sell a course, because I can give you the best knowledge I want. I can give you the best, but if you don't put the effort, it's like people signing up for gym, never going, expecting to lose weight by not going. Like, you cannot pay for something and get transfer. We are not in Matrix where you put the and you get knowledge. Okay, you need to do the lift.
That's what I always say, right? That's what I always say. It's why there's like no issue streaming talking about this shit. There's no diluting this. You either know what's going on or you fucking don't, right? First, shout out to the Golden Pocket, by the way. Shout out to the Red Box and a Wick through, by the way. But yeah, like, I can sit here explaining this shit, giving you all the stats, whatever, but until you actually sit there and understand what's going on yourself, doesn't matter, right?
99% of people, they want something.
Don't matter.
They want the YouTube strategy. 99% we rate with moving average. Okay, and this is the comments that I usually get on my channel, and they say, why you need to overcomplicate this? Because financial markets are fucking complicated, because it's multiple information they are exchanging in dark pool. You have order flow, you have options. If you want to make this a 50 to 100 dead cross moving average model, good luck on the side. Good luck.
I love it. We're coming to the end now. It's been such an incredible episode, a very unique episode of Words of Wisdom for sure. Just to finish off, I'd love for you to talk to the audience, like just give them your best advice in terms of scaling their journey as a trader. No matter where they're at.
Have no life.
Beginner, maybe you can give different advices based on where they're at, but beginner to intermediate to advanced. Like, what would your message to the trading audience and community out there be?
Okay, so to the one that are starting and to the one that are scaling, don't put capital at risk before you are able to measure your edge. Measure your edge. Either it is algorithmical, either it is with a trading journal. Get your statistics ready. Be able to understand your drawdown, your profit factor, because these metrics are the one that you will want to check when you are in drawdown. And if you don't have something that is backing what you are doing, you will start to say, I'm just gambling. Trading can get like gambling if you don't have an edge. So start in a way that is protecting yourself before risking real money. Do all the work necessary. before that you put real capital at risk. So in the moment that you put real capital at risk, you will not lose money for ego, but you will lose money only for the retracement of the market for your model, but you will be profitable in long term. The difficult part, guys, is not trading. The difficult part is the patience and the work that you need to put to become a profitable trader with edge building. From this moment, it's all on the upside, and check your expectation. You cannot get rich with a small account. You cannot try to flip your account. Real trading is based on risk management. Don't check the return, check the drawdown, and base the model that you use based on the drawdown, not on the return. Because if you are not doing this, probably you will never check the return. You will only check the drawdown, and you will have a huge risk of ruin.
I love that. Fabio, thank you again for being the one to suggest this, first of all, but doing this again for us and trading live today with your own personal capital. You don't have to do this. You don't get any benefit other than the benefit you're giving to the community and the feedback, no doubt. And on behalf of everyone who's watched this episode, all of your episodes and the last Chart Fanatics episode, we want to say a massive thank you for showcasing this and opening a new door to a level of transparency that wasn't in the industry before, I would say, and I think most would agree. Everyone at home, drop a comment with your biggest takeaway from this unique episode. It's absolutely crazy. It blows my mind every single time. I actually have to do like deep thinking afterwards, like what just happened. But links for Fabio will be in the description below. Check out obviously Deep Chart.
I mean, I guess if you haven't traded order flow, I guess it is like interesting, but
so much time on their end, but also gotten feedback
it's all
from
the
some of
same
the
shit.
best traders in the world. So it's going to be an absolutely world-class platform as well.
The no-brainer trade, it's usually the trade that gets smoked on. Bitcoin has a history of leading the stock market, and you can easily see that by just taking a look at the data, right? And then here we are again, 2025, October, we put in our high, we've seen a big fall on Bitcoin, and the stock market is now starting to get weak. The technology is moving fast forward. Those chips are basically going to zero within 2 to 3 years.
Gareth Soloway is back.
not
He's a chief
true.
market strategist at Verified Investing, and we'll be getting his outlook for 2026, what's next for monetary policy from the Fed, what's next for stocks, Bitcoin, and precious metals, and he's going to be revealing his favorite asset classes for 2026. Stay tuned until the end when he reveals that. It's not what you think. This episode is sponsored by Kalshi. It's a fully regulated platform that lets you trade on real-world events, from economic data to political outcomes. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, and over 140 countries. Go to Kalshi and use code LIN, L-I-N, or click the link in the description down below, or scan the QR code here to get started, and new users can get $10 off when they deposit $100. More on that later. Gareth, welcome back. Good to see you again.
Hey, David, great to see you, and thank you for having me back.
Thank you for coming back. It's been a great year for stock markets. Well, actually, compared to some other assets, not so much, like gold and silver, but it's up. And the question we have in our minds is whether that'll stay up for the new year. Now, we're speaking today on the 18th of December. Huge update for the stock market indices. The S&P is up about 1.4%. The Nasdaq is up almost 2%. And today the CPI numbers came out. So headline CPI rose at 2.7% annualized, which was lower than the expected 3.1%. I guess that's partly why things have rallied so much this morning, given the lower than expected inflation numbers. That gives more room.
There's like a
for the Fed
lot
to
of
cut
drama
rates.
around this number release, right? They excluded like a bunch of stuff from the typical calculation. They basically gave it 0 values for October.
Post is what that implies.
Yes, absolutely, David. So again, number one is we can debate till we're blue in the face whether we believe these numbers or not. I find it interesting that the president had a primetime speech last night where he talked about how prices were coming down and everything's going great, and then we get this CPI government data today that kind of reinforces it. But the point is the market likes the data. It does open the door for the ability for the Fed to cut more. And really, there was partially that factor, and the other factor was Micron. Micron saved the day for the AI trade. We saw Oracle earnings recently; those were nasty, mostly because of the debt that they're taking on. Broadcom, another $2 trillion, or was $2 trillion after earnings. That stock has dropped 20%. And so Micron needed to really be a good number and with good guidance, or the AI trade would have just collapsed. I think this is the beginning of that float up into year end, where we see a float, but then watch out, 2026 is not looking good on the charts.
All right, we're gonna get to the charts in just a minute. So, tell us about the tech stock sector in a bit more detail right now. Just yesterday, I received news that Oracle, who was trying to fund a $10 billion project, was cut off by Owl Capital. So that contributed to a sell-off, which let the markets down. But tell us more.
Yeah, and we've also had other news, right? I mean, there's been so many factors in the AI space that have deflated this bubble somewhat, at least. For instance, we talk about the depreciation of these chips, how these hyperscalers are depreciating the chips over 7 years. So they're marking down that loss based on 7 years. But in actuality, these chips, because the technology is moving fast forward, those chips are basically going to zero within 2 to 3 years. And so they're really increasing artificially their earnings. And I think the markets are starting to see through that. And then we have to talk about all these other factors. For instance, everyone apparently has a $100 billion plus deal with OpenAI, but how is OpenAI going to even go close to raising enough capital to complete these? And all of these factors.
No, actually, I saw a pretty interesting interview on this, because like everyone has been kind of worried about this whole Google thing, right? Like Google just essentially suffocating them out of the market with like free to use options. But there's like a pretty large like private market, right? Like businesses using these services. And it seems like OpenAI is starting to like take a larger and larger claim in that sector, which it drives a lot more revenue than like just like the typical consumer, right? The individual consumers.
Including Oracle's massive debt overload of $115 billion, have really caused investors to take
like there's no like verified statements of this, but that's what they're claiming. So interesting to see how that plays out.
Step back from the AI trade. And I do think that will continue, but we're due for a bounce. And in fact, let me show a couple charts here, some really interesting charts. So first off, this is your Oracle chart, and you can see, or excuse me, Micron. Micron, folks, right here, we see again gapping up today. It is up 10%, and that's helping get this AI trade back on track. But take a look at Oracle. Oracle's down 50% from its earnings 2 quarters ago, that massive move up. And so essentially what this is doing is it's discounting the risks that Oracle has taken on, the amount of debt, whether or not their backlog is a real backlog or just figment of their imagination. But look at this right down here. This actually has me bullish now on Oracle for the near term for a bounce. We filled a major gap going back to June of 2025. And so we should see some sort of technical bounce off of this.
Like there's tons of PDF editing software where every company owns hundreds of Adobe licenses. Yeah, exactly that kind of idea. But the problem with OpenAI though about that is that like, Anthropic is like the leader in that sector, like by far. So I'm curious if they actually have like a realistic chance of taking some of like that market share back. And the other thing about it too is like, okay, like Google was late to the party, but a lot of these businesses are using a lot of the Google services. So if they start to like offer like a similar solutions, and like they have to pick between like Google or OpenAI, they might just go with Google because they already have so much of their tech stack using stuff like that. So OpenAI is in a pretty interesting position. A little alarming, to be honest. They're gonna have to like really take the lead with some like innovative products and whatnot. And they're also trying to make physical devices. Like no one knows what it is yet, but they are going down the route of making like actual hardware. So like imagine that comes out and it's like a dud. They make some like, I don't know, like shit glasses or something that nobody wants, and they wasted like all that money developing it on top of all these other issues. That could like spiral out of control pretty negatively real quick. I hate Sam Altman. Yeah, he seems a bit... how do you describe it? Like, comes off like quite defensive, right? Like overly defensive for no reason sometimes. I don't know, maybe just under a lot of scrutiny, a lot of pressure. I mean, he is doing what he has to do, right? He does have to kind of speak up his company as well. Can't just go out onto like an interview and just say like, yeah, we're fucked, guys. Blah, blah, blah. But yeah, he had an interview today, actually. I was listening to it at the gym. And he was like heavily stating that like, we need more funding for compute. We need more funding for compute. So he's definitely really pushing that pretty hard.
Throw in Broadcom. Broadcom still remains relatively weak, but look at the sell-off from this level here. After hours, it was $424. It's come all the way down to about $320. These are major discounts on major, almost billion or over billion-dollar companies, and this has really brought valuations down to where you should get a technical bounce, at least for the near term, but it is not even close to being over, folks. These stocks are going to go a lot lower in 2026.
Well, the Micron story is that it basically beat earnings. Let's just sum it up in one sentence. So the fact that there's still such strong demand for AI companies, in Micron's case, AI demand soaring, and in the last quarter, which is what this result shows, maybe the AI trade isn't over. And in fact, it's just heating up, Gareth.
Yeah, it's possible. I mean, again, certainly the charts aren't telling us that, and the actual data isn't telling us that. So there's no doubt there's a lot of demand for AI and AI products. But the problem is we're starting to see margin contraction. And that's one of the reasons why we could all justify that, oh, let's pay up here for Broadcom, let's pay up here for NVIDIA, because they had essentially a monopoly on these chips. Now we have Amazon, Google getting into the mix. Heck, even Rivian. Rivian just recently said they're going to create their own AI chips, so they don't need anyone's chips. And that's going to, again, push prices down, again, contracting margin.
How was that chart, by the way? Because that chart was about to have like a pretty big breakout, right? It's already started. It's already started. Damn, we are late to the party. Damn. We did not keep tabs on this thing. Damn, that's what feels bad right there. I remember seeing this online somewhere like a while ago, and it was like down here. Should have kept track of that. Well, what's the other one? Like Lucid or something? Not looking as hot. We'll toss it on here for now.
Have to say, okay, well, if this margin, let's say instead of 70% is now 30, do these stocks need to be dropping by 50% before they match up to their current mechanics, right? And I think that's the big issue here that investors are going into. And I'd like to just point out some other issues with the AI trade is that even though data centers are being built out at breakneck speed, the question now we're seeing is how do you actually get energy? Where's the energy coming from for these data centers? Because there's not enough energy to power them. And the nuclear plants are 5 to 7 years out. And so how do you actually get these online? And that means that these chips could be being sat idle and losing value over time until that energy comes on.
Not necessarily true, though. I'm pretty sure there's like plenty of spaces to build like currently constructed data centers with enough energy. Like, yeah, if you want to have like a massive continued build out, that's a bit of a risk, but I'm not sure if that statement is necessarily true.
To investors buying some of these hyperscalers.
Okay, let's come back to individual tech stocks and the broad tech.
There will be an energy bottleneck though. Like everyone's pretty like on consensus with that. It seems we are going to run into that issue sooner or later.
Let me focus now on the Fed and the economy and what that means for markets. Take a look at my screen right now. I've got the Fed Watch tool supporting the idea that the Fed will not cut rates. I started the interview earlier by saying that perhaps a lower CPI print may encourage the Fed to be more dovish, no matter who's going to take over Jerome Powell in 2026. But at least for January, the market is not pricing in a rate cut. This is from the Fed Watch tool. This is Kalshi prediction market, and it's very interesting how traders on prediction markets are anticipating events, and that there's a 72% chance on Kalshi that the Fed maintains at the rate in January, which is exactly in line with what the Fed Watch tool by the CME is projecting as well, 73 versus 72. A little bit higher than I thought after today's CPI print. What do you think is going on?
Yeah, I think reality is that the economy, again, is not really falling off a cliff. So the Fed, again, they made it pretty clear in their latest statement that they are starting up this pseudo quantitative easing by buying $40 billion in short-term treasuries.
It's even higher. It's at 75 now.
For the most part, they want to sit pat and see how the economy and the labor market pans out. For instance, one of the Fed presidents just recently said, just a day or two ago, that he was concerned that companies were not hiring because AI might take the place. But next year, if AI is not living up to the task, then there could be a mass hiring going on. And he's a little cautious about being too quick to lower rates if the economy is actually going to pick up steam in 2026. I don't think it will, but that is something that the Fed is looking at. And I also think we have to just realize is that these numbers for CPI could just be setting the table for the next Fed chair that comes in May. And that's where we get our 50 basis point cut potentially, or at least a few 25 basis point cuts.
Is there any scenario in which the Fed surprises us to the upside, in which case they get cut more than expected and we have even more of a rally?
So that there is, but the issue here is I don't know if it would result in a rally, meaning that let's just say the Fed does cut in January. The only reason they're cutting aggressively in January after not choreographing it is if the stock market has taken a massive hit or if the economy has really fallen off a cliff or there's a shock to the economy. And so ultimately, any of those scenarios, you probably have a scenario where the market is not going up but falling and they're cutting because of those issues. So again, I would say that if the Fed is cutting, it's probably not a good thing in January.
Well, let's just jump straight into your year-end prediction. And I guess for this first quarter of 2026 as well, S&P 500 close price end of 2025. Traders on Kalshi are predicting 57% chance, so more than half, just under 7,000 points. So slightly up from here. People are feeling bullish. That's the sentiment right now. What's your sentiment?
I would say at this point, we have a couple positive factors working for a year-end float. Number one, Micron earnings. Number two, CPI data. Those two factors. We're seeing the AI trade get a little traction. That can lead the market floating higher into year-end. The CPI data is going to calm people's nerves to let them feel like if things get worse, the Fed can cushion us by cutting rates. And then lastly, keep in mind that once we get to next week, we have a Wednesday, Christmas Eve, so that's a dead day. Thursday, the markets are closed for Christmas. And then the next week, you have New Year's Eve and New Year's Day, right? And so ultimately, institutional money, which is really the primary focus of selling, they are going to be on vacation the next 2 weeks. That leaves retail to rule the roost, and that means neutral to upside as long as we don't see, and there are some caveats here, what does the Supreme Court do about the tariff decision? That should be coming out in the next week. And then what happens with Venezuela, right? So there
Is that coming out right away? I thought the actual decision wasn't until next year. Is that correct? Well, to find out.
Potential risks there, but if everything kind of goes according to plan, float neutral to higher into the end of the year before January selling.
Okay, and then what happens post-January? Why is there going to be a selling?
Yeah, great question. So let's jump into the charts, and this is where the charts are beautiful, right? So what we have here is a weekly chart of the S&P 500, and what we see is there's a trend line down here that marks the COVID low, the bear market lows of 2022, and then the liberation sell-off low. And amazingly, it all aligns with, you put a trend line connecting all of them, it perfectly lines up. And then essentially what you do is you use the parallel to your advantage and you say, okay, let's drag a parallel up to the bull market highs of 2021. And sure enough, that was right there. You can see a big sell-off during the bear market of 2022. You zoom up to recent. What did we just do? We just tagged that. And the idea is we likely will see another rejection. So technical analysis is going with probabilities, and probabilities here show us that every time we're at the low end of the parallel, we get a major move up, right? Major move up, but also when we're at the highs, we have a major sell-off, and that's the likely outcome.
Yeah, I don't think that statement about the tariff decision is correct. I mean, it's according to ChatGPT, it didn't seem like it. Because I'd heard from, and even me, Kevin mentioned in one of his videos, like that's not, decision's not coming for like a while. So I'm not sure why he's saying that. Maybe this thing did not like research it properly, but I've seen like in multiple places that align with like a much later date than what he's implying.
Come here. You throw in here a chart of the QQQ. Look at this. NASDAQ 100, which is obviously a majority of the Magnificent Seven, 50% of that is essentially the top 10 companies there. And we see that there was a trend line here that kept getting a bounce, and then broke. And look at how markets rallied, but got rejected right here. And so this trend line is also major resistance. And while we could float up, you'd have to assume until proven otherwise that the markets are going to come down. So these are just some of the factors right now, but the charts are heavily favored towards limited upside, maybe back to these trend lines, versus the risk factor is more towards the downside at this point in 2026.
Which is leading which, Bitcoin or stocks, or is there no one leading the other situation at all?
That's a great question. So Bitcoin has a history of leading the stock market, and you can easily see that by just taking a look at the data, right? So in 2017, in December, we had our bull market high on Bitcoin, and 4 to 6 weeks later, the stock market collapsed in January, right? So of 2018.
So it might be early January, not early, but like in January. And the other probability is that'll be the end of the Supreme Court's term in June. Whatever that means.
2018. Then if you go to the high in November at 69,000, we all remember we had a bear market in 2022. The bull market high on Bitcoin was November. 4 to 6 weeks later, the stock market, the S&P topped out. And then here we are again, 2025, October, we put in our high. We've seen a big fall on Bitcoin, and the stock market is now starting to get weak. So you're precisely right on this, is that we can use Bitcoin as a leading indicator for the stock market, and it also points to more downside in the S&P in 2026.
There was an interesting stat that I read recently, which is that a lot of the stock market trading today versus, let's say, in the 80s is retail investing or trading versus institutional dominance back 40 years ago. And this is a stark contrast from the trend that we've seen in the crypto space, where I believe, correct me if I'm wrong, Gareth, but I believe in 2025 and to some extent 2024, a lot of the trading was done where investing was done by institutions flowing in to the space rather than more retail capital flowing in relative to 2021. So 2021, when there was a big bull rally, a lot of new retail investors got in, especially after stimulus checks were given out. Not so much this time. So we're looking at the stock market being more and more of a play for retail investors and crypto more and more of a play for institutional investors. That is a generalization. It's not that simple, but again, that's just simplifying it. Those trends, what do those mean for volatility? What do those mean for sentiment and ultimately price action going forward?
Yeah, so, it's interesting because I liken it back to the 1920s, right? And the roaring 20s is when you started to see retail really take note of the stock market. And there was this feeling that you could never lose, and it was always going to go up in the 1920s. And it led to, obviously, the stock market crash in 29 and the Great Depression in 2022. Leverage was being used back then, incredible amounts of leverage. And what we've seen is, and we heard this after the financial crisis, how retail wasn't back in the market until we got into COVID. And when everyone was home because they couldn't go to work because things were shut down, retail started to come back in. We've seen the rise of Robinhood and all of these other platforms that have allowed for investors, retail, to get involved. So you're 100% right. But in my opinion, it actually probably sets us up for a bigger decline because of that. And then vice versa, in my opinion, you have crypto, which again was mostly retail and now is much more institutional driven. And again, so still a lot of retail in there, but the big money is obviously coming in. You saw this big burst of that, which helped early in 2024 drive Bitcoin. Now we're seeing a little bit of a lull. I do think that does cushion Bitcoin. We don't probably get as big a drawdown in Bitcoin as we saw in previous cycle moves, right? We are at the 4-year cycle, so it's not a surprise that in 2025 we're seeing a top here. But my guess is Bitcoin doesn't have its normal 75% drawdown like last cycles or the previous cycles. Instead, look for somewhere in the 40 to 50% drawdown, and then look for a base with institutional money accumulating.
Well, that's still significant. Has a 40 or 50% drawdown already started, given how far Bitcoin has fallen from its highs?
Yeah, you have to think it is. And Bitcoin here, if we look at the chart, peak to trough, we've already dropped 36%, right? So my thesis is that if we look at the chart on Bitcoin, we're likely, and this is something that's happened in other cycles, is we're likely headed back to the high of the previous cycle at 69,000, right? And so if we do that right there and we bring it up, kind of this becomes my zone of 69,000 to 74,000. And if we do a drawdown from the highs into that range, we're right in the midst of that about 45% drawdown into that support. And so that's kind of what I'm thinking is going to happen here. Now, listen, if the stock market really collapses and we get a major collapse, like a la crash type scenario, then Bitcoin likely would go lower because, again, it would just freak out people and they would just dump everything. But I do think, assuming this is a normal pullback in 2026, let's say 10, 15%, then you're looking at kind of a stabilization in Bitcoin. And I still think Bitcoin will continue to see investors flocking to it away from risk assets. For the most part, it's a risk asset still, but I still think big money is looking at it as more of a digital gold, and therefore that'll cushion the downside somewhat.
When you look at Bitcoin relative to stocks and how they've performed, historically speaking, in tandem with each other, and this year the stock market's up, depending on the day, it's up double digits percentage-wise versus the Bitcoin price, which is actually down year to date. When you look at this divergence, do you think that Bitcoin is a buying opportunity relative to the stock market if you had to allocate capital to one thing versus the other?
If I had to right now, yes, I would be accumulating Bitcoin and slowly accumulating on the way down here. Absolutely. And again, I just think that in general, we've got so much money.
Gotta be careful, because if the stock market rolls over for real, better be careful.
So much leverage into the stock market at this point, and you've got these pipe dreams built on this AI bubble. And by the way, I think AI is going to change our world, and we're going to have robots one day that do all our house cleaning, all this stuff. But again, it's margins. Don't think about it as, this technology, Gareth's saying it's not going to change our lives. It is. It's margin contraction. We're already starting to see it, and that's what's driven up the market. You got to look for the defensive names now in the stock market in 2026, and also these ancillary plays like Bitcoin, especially if it comes down to around 70,000.
What do you think of Bitcoin treasury companies? Let me just share my screen one more time and show you some things things now, Gareth. This is a list of Bitcoin treasury companies ranked by number of Bitcoins held. So I'll just look at the top two for now. Strategy, Michael Saylor Strategy at number 1, and number 2, Mara Holdings. Mara, as you know, is actually one of the largest miners in America and arguably the world. They're also the second largest Bitcoin holding company by assets. Now, what have they done in terms of share price performance? Let's take a look at MicroStrategy here. What is it? Check out
MSTR, yeah.
MSTR. And then we have Mara. Both are down significantly on the year as Bitcoin underperformed. The stock market is, you can see the exact moment they started to drop relative to the stock market. They've been dropping kind of coincidentally with the Bitcoin price. The point is they've both dropped a lot more than the Bitcoin price, which is understandable because they have leverage. But they're both dropping. They've both dropped around 50% year to date. Strategy a little bit more, 60% over the last 12 months. Year to date, 45 and 41% respectively. So, Gareth, looking at this, do you think that companies proxied to Bitcoin, should we say, are a better buy right now, given how far they've dropped? Or do you think that because of this poor share price performance year to date in 2025, that more downside is to come? What do the charts show you?
Yeah, and what's amazing about this is that if you go back a year, MicroStrategy was valued far above its Bitcoin holdings, right? It was getting a premium. Now it's actually trading at a discount to its Bitcoin holdings. The reason, obviously, is the amount of debt that they've taken on. And if Bitcoin continues to fall, do they get calls on that debt, right? Does their debt get called? Now, at this point, you got to be careful with these companies that have taken on a lot of debt, because if Bitcoin, let's say, does go to 70, now MicroStrategy is negative on its Bitcoin holdings from its average price of 75. I do think when we get back in a bull run, you do want to look at strategy to get that X amount, like a 2X move off of the Bitcoin price move. But in the near term, I'm still sitting cautiously waiting for maybe one more flush out on Bitcoin down to that 70,000. And then certainly I would prefer to buy something where Bitcoin is actually discounted in strategy versus on the open market. But right now, again, I'm not ready to jump in because of those debt issues.
Once Bitcoin gets to $70,000 as a trader, you have to decide, well, I could buy like you're talking about now, or maybe there's new information that will present itself that will make me either hold off on buying or perhaps even sell some more. I remember working with you for many years now, and there's been situations where you've said to me, well, once it hits this certain target, I'm going to buy, and then you didn't buy because of new market dynamics. And so what are these new market conditions once Bitcoin hits $70,000 that may prompt you to either sell some more or just stay out completely still?
Yeah, and you're right on that. It's so important for an investor and a trader to always reevaluate in real time, because a level that I talked about a month ago, if the chart changes, then you have to be able to recognize that and say, oh, wait, it's changing here. Sometimes that means getting in early above the level you talk about, or sometimes waiting patiently. And I think the best policy here is if we get down to 70, I will be buying. But what I do is, and this comes from personal experience, is how many times have I thought the low was going to be in and it goes even lower, just like I thought the high is going to be in and it goes higher. And so I dollar cost average starting at key levels. That cushions me in case it goes lower. But you're right. If we saw something major, like let's see more Bitcoin reserves being established by other countries. I mean, just imagine, and this isn't likely to happen, but imagine if China starts to do something like that, or other big countries start to move towards Bitcoin as a potential reserve, then obviously these type of things would change the outlook because they would change the chart. But overall, right now, the key is just inching in, toe in the water, then another toe to really cushion the volatility that can be in Bitcoin and even in the stock market.
Okay, we need to talk about gold and silver now, just for a bit. Are you still bullish on gold? Let's just take gold for a start at 4,400. Wow, it's up almost 1% today. 4,400 now.
Yeah,
it's just consolidating around this level. Let's hear it from you.
Yeah, so the beauty of this was we had a support trend line right here established. This was a beautiful thing here, and you can see price kept on bouncing off this trend line, and then we had this high end, and we got right to it, rejected there, and we finally broke out. We formed a bull flag, we rallied up, and now we're forming a bull flag again that looks like it's going higher. So near term, it is bullish as long as we break the all-time high here. You got to make a higher high on the charts for the structure of the chart to maintain itself in terms of a bullish nature. And mid to long term, I'm still bullish. Now listen, be aware, we will get pullbacks in gold. It doesn't go straight up. We know that. But ultimately, right now, the chart near term is bullish and long term is also bullish. I would say if we take out the all-time highs, by the first quarter of 2026, we could see $5,000 an ounce on gold. So again, bullish chart. So I've got to be bullish in the near term here.
How does this look different than, let's say, the stock market? If we overlaid gold and stock market just this year, again, correlation doesn't imply causation, but they've kind of been moving together for quite some time.
Yeah, they have been. And it's interesting because, again, you could argue, well, does that mean gold is a risk on? And the answer is no, because what we know is that the US debt, what we've been seeing from the financial fiscal lack of responsibility in government, is that it's really people going in two directions. They're chasing the stock market right now, which is probably risky, but they're also saying, I don't trust the government. I don't trust the spending curbs or anything like that. And we need to accumulate gold here. Plus, let's not forget, China keeps buying tons and tons of gold, as do many other central banks, and that's keeping a bid under it as well. And so, again, I do think you'll get pullbacks, maybe even a worst case scenario be like 35, 3,600. But ultimately, are we headed higher? The answer is yes.
If we're to take a step back here as a trader, you're looking at what happened this year. Stocks have gone to new all-time highs. Gold and silver went to new all-time highs. Bitcoin, interestingly enough, did not. And, well, it did, but then it fell from its all-time highs. And now it's trading below its $100,000 level. And then you've got the 10-year yield still hovering around, what was it, 4.3, I think?
Yeah, it's down to about 4.1 now, 4.11.
Yeah, 4.1. So yeah, that was a while ago. So and then the Federal Reserve did not start cutting rates until later in the year. It wasn't like the entire year they've been on a cutting cycle. So the question is, what's been driving this everything rally? And the DXY didn't really collapse. It did fall, especially after Liberation Day in April, but it stayed relatively range bound thereafter. And so we can't really pin this on, let's say, unlimited quantitative easing, which was the case in 2020 that pushed everything up. Something else pushed everything up, and maybe we should identify what that is before we look ahead into 2026. Or maybe it's not relevant.
I'm a believer that it is the mentality, the psychological shift within investors, that it's a no-lose situation, which is always something that makes me unbelievably nervous. I mean, think about it. Anytime I ever take the no-brainer trade, it's usually the trade I get smoked on. So, you have this mentality now where we've seen V-bottoms, right? V-bottom after V-bottom after V-bottom. Markets drop big, and then they rebound to new all-time highs within a week or a month or a couple months. And it's an incredible feeling of these new investors that are kind of the Robin Hood style investors to feel like they can never lose, right? Because, again, we fall big, we go right back up. And I think it's an expansion of margin and borrowing, right? More and more money going into the markets. There was an incredible amount of money on the sidelines for a long period of time that shrunk quite substantially. But to me, it's a psychological factor that occurs just before big falls where people start to feel invincible on investing. And that, again, is setting up for disaster.
Do you feel invincible right now, Gareth?
I certainly don't. And honestly, I've traded too long to ever feel like that. When you trade for 27 years, you get smoked so many times over that period that the market reminds you to stay humble.
How has your risk tolerance changed over the last 27 years?
Yeah, so it's gotten much more cautious, right? So early on, I had no money to invest. I mean, literally started with $10,000. And so what I was doing was I was going all in on one play, hoping to just double, triple, quadruple my money. It would work a couple times, and then I would just lose my whole account, blow it right up. And I'm sure many people watching this have had that experience. Over time, I actually found that smaller position size allows you to maneuver within the position, meaning dollar cost average, take a little off the table in the money. And that dance has actually been the key to making a lot of money in the market. It's incredible to think that exposing less money and being more diversified actually makes you richer, but it does because it keeps you from blowing up your portfolio.
Do you still employ the same approach, but just on a portfolio level? So let's say you've got, I'm just using this as an example. Let's say you've got 10 stocks, right? You've got Tesla, Apple, you've got a few other shares. And let's say you want to trade Tesla. You want to get rid of Tesla. So instead of, let's say you own 10 shares of Tesla, you want to get rid of some of your holdings. Some people will sell some and reduce exposure, or the other approach is what basically you've done when you were younger, which is sell the entire position and then get back in when you think it's appropriate. Otherwise, you're not maximizing on the actual gains that you could be making. But the rest of your portfolio isn't changed. You're not selling everything. You're not going all in on one thing. You're just selling the entire position or putting, your maximum allocation to one position when you're getting back in.
Yeah. In general, I have a rule with myself is that, on a stock, for instance, like Tesla, if I have a position and I get up 10%, I usually pocket at least a quarter to a half of that position, and then I'll play with the house's money and let that run. And this way, if it then pulls back, let's say to my original entry or below, I add back that, and my dollar cost average is even better in that scenario. And so again, it's really this dance about, inching in, inching out. You never know where things are going to top out. You never know where things are going to bottom out. But again, by doing this dance, you're able to net more money, even though on individual positions, you may not maximize the gain. It keeps you in the game. It takes your emotion down. Emotion, and when you're over leveraged, is so intense that the market feeds off of it like a great white shark, and that will ultimately make you do the wrong thing. The market will push us to our extremes. Once you're not over leveraged, you're just like, hey, I can follow the chart. I'll just trade this. I'll just go in a little, out a little bit. And again, you do much better. We make more logical decisions, which is the key in trading.
Gareth, let's look ahead to 2026. Your favorite asset, or the thing that you think will outperform other major asset classes?
Yeah, I would say the asset that I'm focusing in on is and this is tricky, right? Because again, I think the stock market is coming substantially lower, but I'm going to be looking at metals, but I'm going to be looking at more the platinum and palladium area, which has just started to run as being some of the key ones here. And then ultimately shifting into more defensive names, higher dividends, that like a Pfizer, like something like that. We talked about that in the past, where these stocks again are trading at valuations where, again, downside is limited in a stock market sell-off. They might even see money flow, and they're not sexy. They're not the ones like the AI ones that are going to make you a 3x overnight or in a month or two, but it's about preservation of capital. When things start to fall, you want to be able to still make money, even if it's a little bit of money. So that's where I'm going to focus. Bitcoin comes down to 70,000 or below. I'm starting to accumulate there as well, and I think that will be a great performer in later 2026.
Where does the S&P 500 have to go on the downside to incentivize you or entice you to get back in and feel bullish on stocks?
Yeah, I mean, at least for a bounce, right? I mean, let's just talk some levels here. So if I share my chart again and just to quickly go over this, I would want at least a correction down to the 2025 high. So right here on the charts, if we put a trend line in here, we drag this across, this would be a level where I would probably start to accumulate a little bit because, again, major highs, once we break out, there's a tendency to retrace and then get a big bounce. I don't know if that will be the cycle low because historically, this lower trend line will be the cycle low. So I would say this is a buy for a solid big bounce. You can make a lot of money on these bounces in bear market moves. And then really at the low end, that's what has shown me in the past that has been the major buying opportunity. COVID, bear market lows of 2022, liberation sell-off low. We get down to here. That's at least for me, the mega buying opportunity. And by the way, as of now, that's around 54 to 5,500 on the S&P. So you can do the math on what type of sell-off that could be.
All right, excellent. Well, Gareth, let's close off the conversation. Any trades this year that surprised you?
God damn.
Yeah, I think for me, the resilience of the market did from the April lows. That was an incredible move to the upside, insatiable demand from investors. I think we're starting to see it waver with some of the performance from the AI trades now. And again, I think overall, that's been one of the big ones. And really, to be fair, silver and gold, as much as I was a big fan of gold in 2023-ish coming in there, this move has been incredible and very welcome. And the silver move recently is astronomical. All right, that is an incredible move. But be careful. Silver has a history of big pullbacks, and I do think we're getting close to one.
Gareth, well, I wish you all the best for 2026. Give us a New Year's resolution. Doesn't have to be trading related. Could be.
All right, we'll make a trading resolution. The trading resolution is going to be to trade logically and, again, trade smart. All right, not about hype. Ignore that hype out there. Ignore the media out there that's going to push narratives and social media that's going to tell you.
We're going all in YOLO, right? All fucking in one trade YOLO. Boom. Time is it? 11:30. How do these 30-minute candles print? Interesting. Probably time for a bit of a juice box yap session, right? Interesting. Temper that juice. Interesting. Looks like a bounce might be brewing, right? It's pretty big bull divs on like the daily. And we're about to get like a crossover on the daily here. Interesting. How's the order book looking? Yeah, because like when we talked about this yesterday about like how this area was becoming vulnerable. Like the walls, like the 86 wall got taken earlier, then today we took out the 85 one, and then there's like kind of thin air now until 82. Also there's like a massive buy wall on purpose at 82 as well. So it seems like this thing is getting more and more likely being in the scope. More and more likely it's going to be in the scope. Remember, these lower levels are all the same, right? This kind of same story as usual. The high time frame plans haven't changed. So all this lower stuff still the same story. Oh, so where is this thing? Also, I don't know if there's gonna be anything particularly juicy, to be honest. Like, I wouldn't be too trusting of this lower stuff with this right here. And knowing that there's like kind of just thin air in the order book below. Also, this move up has just been like a squeeze, right? The open interest is just like declining this whole time. At least for now, like obviously that can change, but not seeing a whole lot of people trying to like long this right here. It's a bit of a weird one. I don't know if I'd be too trusting of this stuff. Like, okay, sure, maybe we kind of like clean the single print at the VWAP. Maybe we kind of clean these two lows. But realistically, like, it's probably looking at this, right? If not, like, the lower levels. Because if anything, like, you were going to take, like, this kind of breakout, right? Like, when we, like, flipped the VWAP earlier. I got the yellow line. So
Ask yourself this question. Next time you see your reflection, is it me or my ego? Whose name's getting mentioned? Am I a man or a monster? Is it a job or a hobby? Is it on, is it over?
keep that in mind, but I don't know. I wouldn't be feeling too trusting. If you can like wiggle your way on like a low time frame entry, if there's like edge forming, okay, to go for it. But this zone's a little bit of a magnet right now. We'll kind of just leave that written, like the 3 areas of interest below. The single print, like then the 2 poor lows. Plus, how's like CME looking? Same story, right? Maybe you can entertain the gap fill tomorrow if we keep going higher. If we end up like opening on the RTH up here and it comes to like fill the gap. Cleans this like first low. Well, a super sus, right? Super sus. Coming back down to here with this right there is super sus. Like realistically, you're gonna want to flip this zone, right? If we are gonna, if this like div is gonna start playing out, we are gonna start to reclaim this level. We want to start going from here. You want to start to pull back. So ideally, you're flipping this, right? That we just grab this liquidity. But ideally, we do something like that. Kind of start to push past value area high. And right now, we are starting to build a little value up here above the value area high on the TPO. So that's like potentially a good sign. Like we didn't just grab this and immediately start nuking again right after. But there's a low volume, right? And I think we've all seen how the past few sessions have been going. It just like come up, grab the liquidity, and then go right back down. Come up, grab the liquidity, go right back down. Go another cluster up here. It'd probably be just flipping the zone, right? Also, like this one is like a lot more comfortable than this, or than these lower ones, right? Because you're getting further away from the zone. I'm building value higher and higher. I just say like a bullish retest. Like this whole region, right? The golden pocket, the yellow line. We'll just kind of call it like 86.6 or 87.6. And for the shorts, yeah, a bit tricky, right? This is probably it. Like you would have got filled here, and you probably would have avoided getting stopped out with the break-even stop, even with this wick. So you would have had a nice little pixel perfect juicer that might potentially roll over. And the same story here. I don't know if I'd be too trusting of like taking anything in this like higher area with like this all up here. But keep it in mind, right? You can keep it in mind. Just be mindful of the zone. There's a world where we come up and then like do something here, right? Whether it's like a swing fail or like some kind of like failed auction or whatever, right? Like 3 drives. It's the usual shit. Head and shoulders, blah blah blah. But I definitely wait for something like solid to print here. I wouldn't be like trying to like, unless there was like pretty clear bearish edge forming up here, I wouldn't be having like limits just set like this, because there's a world where it just like comes and that's it, right? You don't want to get your ass ran over, so like let a reversal print, then you can kind of like get on the move to down here. Like whether your entry is like here or here or here, like any of these, you're going to be targeting like this low, right? So let's just say you put your stop up here and your entry's like here somewhere. Like either way, you're like juicing, right? And you can have like a much tighter stop than this, depending on the actual structure that ends up printing. But we'll leave it written on there. It's kind of like 89.1 level. So let's get rid of this, yeah. And also, like the value are higher, right? Just keep this in mind as well. Like there is a world where we don't even make it up here. The thing is, there's not much going on in terms of like liquidity here. But that was the case yesterday as well, right? On the way up on this like failed auction we had at yesterday's levels, it was the same kind of story. There wasn't really much going on in terms of liquidity, so but we might just end up mathing right the value area high. But again, I'd be pretty cautious with that. They like let it print. If it is in reverse there, let it print first, because like this is right here, right? So be a little patient with these if there's not like just coming in on some like overextended pump on a low time frame. You got a golden pocket, right? To the downside, short to the downside. A little tricky because you're kind of like a bit risky. Like we talked about how these like are not going to be like high probability zones of reversal, but we can reverse at any of these, right? That is in the cards. Could just end up like doing like a retest of this and going. So if you're trying to wait for like the VWAP to get flipped kind of thing and that, might end up getting run over. And ideally, like we've been following along because like this was like a juicy short opportunity. This is another juicy short opportunity. So either like A, you're still in them, or like quick profit, have a little bit left running still. It'd probably be like the gap fill, and then it ends up like rolling over after the gap fill on CME, right? The RTH gap fill. But if we do some like kind of 886 type garbage, they come down, fill the gap, 886 bounce, and then like do this kind of garbage, and then coming into the zone finally. VWAP would probably be like curling over at that point, like some crap like that. Hard to say though, because it depends how this is going to be looking. And you also might not get this. Like this could just be another one of these massive dump situations where it just starts to blow through with like no retrace at all. But it'd probably be something like this, like the 886 golden pocket before sweeping this low. I mean, you have to be watching the order flow for this though, because like this, you could end up just going right. So you definitely want to have some like confluence with this stuff, not doing too hot either. And order flow looking pretty bearish. We just delete. We'll just say like a golden, like a bearish retest of like 85.7, 85.6-ish, like this kind of region. After the gap fill tomorrow. Yeah. Not the greatest of entries though, because like suppose that we do roll over from here, like you missed the ideal entry. You should have been in from like the gold, like the 618 entry up here. You're kind of like trying to weasel your way in at this point. Delete all that. Fix some of this stuff. Whoops. Should do it though. That should be like enough to get the juices flowing. Some ideas. Where did that get rid of that? Complete some of these fibs. And it is options expiry tomorrow. We have a quad witching tomorrow to end the week. So we might be seeing some pretty interesting volatility. Yeah. Should do it though. I should do it. Let me turn off this damn alarm. Did we miss anything? Did we miss anything? No, yeah, we did miss some stuff actually, didn't we? Probably should mention that. Because I haven't been looking at the data, so the whole time they're watching these videos, I haven't really been paying attention to what's going on. But there's actually a lot of shorts trapped right now, and they're already all underwater, and even more open like right here. So if we start to go up from here, like these people are all trapped, and so is like this whole cluster. So look at another squeeze setting up potentially. But definitely is worth noting. Boom, boom. I'm just looking through all the exchanges to see what's going on with the rest of them. It's just Binance mostly. Every other exchange is like people that did short here have already closed out. Yeah, definitely be paying attention to the open interest on Binance as this move potentially progresses. Interesting. They might be going for a swim. Because we are sitting here building value so far above the value area high, right? Above yesterday's point of control as well. And this stuff looks like it wants to start going. Interesting. Anyways, that's enough of that. We can look at some of this options data too. Nice juice box. Not really. You know, a little mistimed, right? If we had done it earlier, they could have gotten a potential like long earlier, and you could have taken the short. Now you're kind of like in the no man's land. You know, all these high time frame plans haven't changed for so long. This box has been here since these lows basically. My favorite Discord server. I don't really have any. I don't really use, like, the only thing I use, and I didn't even use Discord until one of you people told me to make it for like the channel. Like really like the Discord we have is the only one I use. And I don't even use it that much, right? Oh, really? Yeah. Like what Discord channel should I be in? Like I eventually joined like the Exo Charts one for like templates. And yeah, that's basically it. Basically it. You're never on there? Like I see it. Like, well, first of all, whenever I have it open whenever I'm streaming, because I always come in here to post the link. And then like sometimes I can see the message on my phone, right? If there's like a notification. Yeah, I wouldn't say I'm particularly active. Like I don't I don't know. What do you guys want me to post in there, kind of thing, right? I don't really know. Like I have my own server that I use now more than anything on Discord. Like I have my own server and I have like a section for like posts from Twitter. I have a section for videos. I have a section for links. And then I have like a general note section that I put stuff in there to remind me. Whenever I see anything interesting on Twitter, I save it there so I can like go back and reference it. Same with the videos, same with the links. It's more of just like a brain dump of stuff, of links and whatnot, so I have to like keep track of them. What do I use for what? I'm in a ton of servers. Ton of servers for what? Or like of what kind, I guess is like a better question. It's a good way to use Discord. Well, because I mean, I just don't want to have a notes. I used to put all the links in this massive notes thing, but then it got like too convoluted. So I was like, okay, I'll just put them in the Discord. I'm in the Theta Gang server. What is the hell's Theta Gang? Like options. I'd imagine it's for options. View prop firm servers, financial juice, Bitcoin mining. No, I never like I just never really bother. Like I joined like at one point I was in Martin Shkreli's Discord for a bit. But like there's too much going on in there, right? You actually have to literally sit there and read the whole fucking channel to know what's going on. And 95% of the fucking time it's literally just a bunch of idiots. Like I can't say I care to join a bunch of Discord servers and waste like 30 minutes, an hour a day just reading a bunch of fucking brain rot. I want to join the voice chat, talk to Martin. No, I left that thing a while ago. So I don't even like watching that guy. He doesn't understand like he's good at trading. He's a different kind of trader, but he doesn't understand like the just straight up PA trading / quantitative trading. Like he thinks the kind of trading that I do is not viable, not realistic. Meanwhile, there's like literally hundreds of us that do this, probably thousands. But it's interesting, like that guy knows a lot about like biotech and whatnot, like pharmaceuticals. You're trading ticks, he's trading companies. Yeah, lots of you do it, but the big money's learning how the money flows. But I'm trading how the money flows, like literally. Like the primary thing I'm trading. Buys and sells whole companies. Yeah, maybe. I can't say I'm like up to date with what he does, so I don't know. All I know is that he blew up his account pretty recently, right? So, kind of hard for me to take anyone serious that does that. But if anything, I would like stay. If any, you know what I was actually doing for a while? I was in that channel to like for harvesting sentiment data. Because the people in the crypto section were so fucking stupid. It was hilarious. Like when you find dumb people and you collect data on them, it's honestly fucking hilarious how good of a signal it is. Boom. But like the thing about like being in all those channels, like it's too much noise. Like too much noise. I don't know. I haven't like sat in them to really know exactly per se like what's I'm sure there are some useful people in there. I'd imagine. But I also suspect it's a lot of having to sit there and read through a lot of garbage. But the other thing about it is everyone trades differently. Everyone trades differently. Honestly, I'm just looking for my kind of people. Yeah, that's fair. That is fair. Thing is, there's very few times where I come across a trader that makes me think like I would like to I'll talk to this person about trading more. Because you're not really gonna find it, right? Like if someone's like like, okay, let's think about it. Who is the average person who's sitting on a Discord, just spending their time on the Discord, just typing shit endlessly? Probably not going to be someone that's knows what they're doing because they don't need to be spending time on the Discord. Or aren't very productive because they're spending a bunch of time on the Discord. Or people are not going to care to share on the Discord if they do know what's going on. They don't want to like dilute whatever edge they have. I don't know. I haven't given it a shot, so like I'm kind of just talking mostly from my experience in that one server. So it could be completely off base. I'm more so curious how like that one channel, the Investors Underground chat is. Cause my friend was a part of that too, funnily enough. And it's like, I mean, the fee is not. Most people aren't gonna pay $2,000 a year to be part of a chat. So it weeds out a lot of people from getting in, right? So that seems more appealing than anything, to be honest. Oh, I'm not looking. The Discord is kind of nice, but it's not very active. Yeah, it's super small. It's super small. And I think most people just use it for the market updates more than anything. Like, there's a handful of people in there that will like send me like messages, like DMs, and I like answer questions and whatnot. And then some of them will post it in the other chats. I mean, kind of expected as well, right? It's just like a free Discord, not like offering anything with it. The main reason I made it was just to put the resources section, because somebody was asking me about it in the YouTube comments of one of the videos. Then I started doing market updates there, just cause. Like my way of like journaling / planning trades when I'm like not streaming. But who knows? Who knows how the Discord grows over time? Maybe it'll get bigger and bigger, more active slowly. But it seems like most people, I mean, I don't know. You would think people would have a lot more questions about trading or just discuss trading in general. But that's like my perspective of it. I'm just like a curious person that asks a lot of questions. I'm not looking at this for typing, more talking. There's voice chat. That's fair enough. Dr. M's Discord has a private channel for trade opportunities. Only for CFAs. Interesting. I mean, I don't know who that is, but that's interesting. I'm leaving tomorrow? No, not yet. I have to get my stitches removed Saturday morning. I'll probably be here until like Monday or Tuesday, probably. Something like that. The question is, when do I come back? That is the real question. Word, come say hi before you leave. I'll still be around for a bit. Be around for a little bit. Well, so one of the streams I want to have like if you read the book Mastery by Robert Greene, like on the road to mastering some skill, you should like take time to like reflect on like the checkpoints that you've reached It's a lot when you really think about it. Like, think about the start of when you began trading or learning about this stuff in general. But like how much we know now. Actually, quite a lot of knowledge, right? So it's like good to look back and think, oh wow, like we like learned this much or like changed this much. And also like kind of set goals for the next year moving forwards. Yeah, like something in mind that you're actively working towards. Like I already have them in my mind, but I've always had them since I started. But like, it'd be interesting to kind of go back and like compare the very first trading video to now. Like so much has changed, right? So much has changed even in our own trading. Hopefully so, right? Hopefully we're not the same trader we were a year ago. That'll be a bit depressing. Like a lot more like a CME focus. A lot more monitoring like all the different sectors in the financial markets. I mean like our time-based versus like volume-based charts. Keeping track of the ETFs. Like implementing all these different like tools and whatnot. Quite the change. Quite the change. Self-help book that argues you can achieve mastery, go through a structured three-phase process. Apprenticeship, creative act. Yeah, or just reading the just writing about the book. Yeah, exactly. It's an interesting book. That guy wrote a lot of books, right? That guy has like a plethora of books. I have so many of them. Like the 48 like the laws of power, seduction. Like the mastery. There's another one, right? What was the other one? Oh yeah, the laws of human nature. I haven't read this war one though. Interesting. I didn't even know that existed. Interesting guy. Also some pretty interesting like interviews on YouTube. Funnily enough. Because there's a lot we need to do, right? A lot we need to do in terms of this trading game. We're not even halfway up the mountain. Probably not even a quarter. For sure. Yeah, but we got time though. We got plenty of time. Now, how long has it been? Eight, 4, 8. Like not even 2.5 years since starting. Most people have like Like this guy in that YouTube video had like what would he say? Like he said that he started using order flow after trading for 60 years. So that implies that he's been trading even longer. So as far as the timeline goes, we're still like right at the start. I think we can leapfrog a lot of these people, right? We keep it up. If we haven't already. Plus, I'm gonna be having an interesting conversation during Christmas at home with some people. Some Canadian financial titans, some might say. Because it would be nice to work in a financial institution for a little bit. I might just tell them I'll do it for free. We'll worry about that later, though. We'll worry about the holidays. Oh my god, that's awesome. I want to hear their stories when you get back. Oh, that'll be interesting. That'll be interesting. One thing about that is I have to move. If I do that, I 100% have to move. Because everything that they do is in like the core of downtown Toronto. So I have to like sell this house or something. And honestly, I might stop streaming. But if that's what it takes. It is what it is. Probably not, though. Probably not. I don't know. It's like a trade-off. It's hard to decide. I have to have a discussion first and see what's on the table before deciding. It's like a trade-off. Because like right now, like there's like all like the freedom of working for yourself. Which is nice. But the knowledge is getting more and more limited. It's getting harder and harder to like find things to learn about. So I'm like finding like random. But I found a pretty good one actually pretty recently. Actually, it was just like massive thread on X. Where this person posted this like massive thread of published algorithmic trading papers. But it's been interesting to kind of go through that. But the problem is that there's like a certain knowledge base that only exists in the inside of the walls of finance. And unless you are inside, you're not going to find it anywhere else because they don't publish it. You can't. When it comes to finance, there's just certain things you can't put out in public. It just ruins it, right? If everyone knows it's ruined. And you can't copyright it either, so unless we make the cross into there, we're not going to learn this stuff. Or have like a some kind of like mentor to like help develop our own version of this. Like I have done that to some capacity, making my own algorithms and whatnot, but I don't know how crazy things can get, right? It's like it's like an unknown world to me. So maybe some of this algorithmic trading is like more insane than I could have ever even imagined. But we'll see, we'll see. We'll see what they have to say, what's going on. Please don't stop streaming. You know, who knows? Someone probably will, right? At the end of the day, I'm not like, I never came on here to be a streamer. It's kind of practice some social speech skills. Also help with the whole notion of like trading being extremely isolating. Well, it's not like I ever sat here with the goal of having like 100,000 subscribers or anything like that. We're pretty cool if we did though, right? We're pretty cool. We're almost a quarter of the way to 1,000. Well, I think it's gonna be pretty hard to grow the channel, but just by doing streams. At least the kind of streams that I do, because they're just like lengthy streams, right? A lot of times just not doing anything, kind of just sitting there thinking to myself, doing stuff. Like lately we've been watching a lot of videos and whatnot, just because it's kind of like chilling a bit more. But usually streams aren't like that, right? Usually just the chart's open and I'm just nerding out whatever. I suspect that shorter videos would be a lot more efficient for growing the channel. Because in reality, most of the subscribers I have are from the 3 videos I have. Think about that. The 3 videos I uploaded 11 months ago have garnered more subscribers than the, how many is this? 195 live streams we have. So I have a sneaking suspicion the videos probably gain a lot more subs. Maybe we can develop the method and strategies ourselves. Just stream whenever you have some time, chill with the homies. Yeah, we'll see. We'll see. I mean, it won't be out of nowhere, if anything. But for now, we'll keep doing things as we are now. Maybe we'll make some YouTube videos talking about some stuff. The thing is, I was gonna make YouTube videos when I'm not streaming. Like, I was gonna make the juice box as like a video. But the problem is, it's like a pain in the ass, because when I'm at home, I have my MacBook Pro with like a 57-inch monitor. And I tried like recording a video there once, but like it doesn't work properly, because in OBS, like the screen capture thing on MacBook is like deprecated, and then like the one that they have on there, how do I describe this? Okay, so like, this is the 57-inch monitor. And then I can set the MacBook or like the OBS to capture like my trading view window. But the problem is that this monitor's resolution is so massive. It's like 8,000 by like something. I don't even know. It's like an 8K monitor. And for me to like record a 1440p video or less, it means that this trading view window is like super fucking small on the screen. Like tiny. So I was trying to do this, but it kept like the cropping of it kept fucking coming out weird. Like I couldn't get it to do it. I was like, whatever, fuck this shit. Fuck this shit. Yeah, ideally we do at least that. Mr. Bex, what's up, man? Not too much, just chilling in the night, chilling before going to bed, yapping. You can just clip it with the YouTube creator tools. No, I'm talking about when I don't stream. Because normally when I don't stream, I just post in the Discord, right? Like whatever I'm planning. But when I was at home in October, I planned to record me doing a juice box, just like me like offline, just like a recorded video, and then upload it to YouTube. But like trying to get it to record probably in OBS was like a pain in the ass. And then the other thing about it, the MacBook, I don't know why MacBook does this, but if you like use the built-in software on a MacBook Pro to record a screen, it doesn't record sound. Which is like weird, right? Points for like privacy concerns, which is because seems absurd to me, but at least the built-in recorder. Yeah, I have a sneaking suspicion that videos like that would probably get a lot more traction for this stuff. And then other kind of videos, like I don't know, right? Like what am I gonna do? Like a TPO tutorial? Probably like fucking 100 of them on YouTube already. Like, what am I gonna say that people haven't already said? Kind of pointless. Kind of pointless. Honestly, it's fine like this, to be honest, right? Like the whole, just how the streams are going. Suppose the channel like grew bigger and bigger and bigger. Then the chat just gets like more and more and more chaotic. To the point that you can't even like follow it and interact with people. Like imagine the chat was like fucking like XQC's chat or something. Just like a fucking scrolling text nonstop, people like spamming Lord knows what. Be chaos in there. Anyways, let's wrap this up, right? It's time to call it a night. Quite late. How long have we streamed for? 5 hours? Goddamn, goddamn. Goddamn. Where's this thing? Do a quick chat shout out and get rolling. I do have shit to do still, actually. And my ear hurts. My ear hurts. I'll go put those eardrops in. They gave me some prescription eardrops. Hurts like a motherfucker. So shout out to Dev. What else we got in here? Shout out to Lyle. Shout out to Olympic. Shout out to NASCAR All O. Oh yeah, I forgot. Today was quite the chat, right? Bunch of yappers in here. Yeah, shout out to Mr. Bex. Oh, Olympic's still in here. What the hell? This guy's a lurker. Lurking. Yeah. No, we'll be back tomorrow, usual time. I'm kind of back to the usual. So we still got a few more streams before the Christmas break. Oh dear though. Oh dear, calling it a night. I'm tired. Gotta go nerd out still. Feels bad. So later. We'll be back again soon. Later. Later.